Good morning, good morning, good morning. This is Dr. Max in the house. I'm so happy to be here with you today. Today we have a special episode that you all been looking for. It's all about the updates I've been making into the. Good morning, Joseph Kepler. Good morning, Ken Love. It's a pleasure to be with you this morning, guys. Good morning, Nosti. How you doing? So this morning it will be all about explaining the updates I've made on the MMM indicator. Good morning, Pradeep. Good morning, Helicopter Tech. Good morning, guys. Good morning. So happy that you can be here with me today. Good morning, Gaden. Today is a very special day. It's a special day. Why? Because today is the day that you'll discover the secret of the market, and then how you'll be able to trade with no fear in a certain way. You'll be able to understand the market much better. However, you need to be testing the indicators. The much needed webinar. Yeah, that's true. It's a most needed webinar. Completely agree with you. Yeah, so I'm going. Good morning, Jameson. So this morning I'm going to in depth into the Max Maserati model. Very in depth, guys. So I'm going to explain every single details. Don't hold your questions. I'm open to every single questions. I'll be waiting for your questions, and then I will be explaining every single details of all the updates and how you'll be able to use the Max Maserati model in a certain way that will help you to have the edge you're looking for to understand much better the market. However, you need to test and retest at least 100 or 200 back tests to see what's worked for you. And then, any of you have seen the new updates I've made with the MMPD? Anyone have the new updates I've made with the MMPD? Any of you have tried the updates I've made with the MMPD? Anyone? Updates with the MMPD? Yeah, well done, Pradeep, well done. Yeah, the MMPD now is just amazing. Yeah, it's just amazing. It's the I will say now it's the backbone of what will help you understand in an easy way, like what the market is doing, I mean what the market is focused on. Okay, first thing first, with the MMM, the first thing you do, like before you do, there's two things you need to know when you're using the MMM as your model, as your strategy. There's two things you need to know. First, you need to the Creole version. I did it yesterday, so you can go on my YouTube HT, you'll find it. But this one is in English. So you can find the Creole one. I did it yesterday. Yeah, before yesterday, I mean. Yeah. Anyway, so first of all, well done, Helicopter Tech. Well done, well done. First of all, with the model, there's one thing you need to know. What you need to know, I mean, like if you took my classes, you already know what I'm talking about. Like I created a certain way of you visualizing the candles, because the candles, they tell us everything we need to know. They tell us everything we need to know. So basically we don't really need we don't really need anything else, because the market is what the market is: candles, is buyers, sellers, and what are they doing? They are exchanging goods. What goods? Shares, contract, whatsoever it is, money, if it's Forex, they're exchanging something. It's between me and you exchanging something together. So the market is actually it's very simple. Even the market is simple, but it's complex, not complicated. Okay, complex. Okay, the market is simple but complex. Complex in a certain way that since we have two participants in the market, two major participants, buyers and sellers. If someone is buying, someone is selling. If someone is selling, someone else is buying. So it's a zero-sum game. It's like if you're buying something, if I'm selling something, you need someone to buy from you. If someone is selling something, you need someone else to buy from him. You know what I mean? So this is the way the market works. But however, it's not that simple. Like for example, you just go to the market, you just buy something from someone, or you have something you want to sell, you just sell it to someone else. You know what I mean? However, when you have a huge market that represents the entire American economy, or you can even say the world economy, so you need a control. You need someone that can facilitate this exchange between buyers and sellers in a good way that allows to have fairness, to have equity. You know what I mean? And then, so this is what the CME, if we are trading futures, this is what the CME is doing. It allows people to sell and people to buy in a certain way that the market doesn't really shake the market. So everyone can participate. So see the market as someone buying and someone is selling, just as simple as that. Someone is buying something, someone is selling to someone else. That's all you need to know. And then how the market is represented. It represented by candlestick, okay? By candlesticks. The candlesticks, they tell us everything you need to know. Okay, so I'm not going to enter into details with you about candlesticks, but however, if you have the Maserati Model Pro, for example, let's take everything else out. We'll just keep show the table. We'll just keep the MMM bias, okay? The MMM bias, and then the symbol, maybe the time frame, yeah. And then we'll just keep this, okay? And then we'll hide everything else, okay? I will hide everything else. Lines, boxes, okay? Bar colors. Anyway, you have it in the MMM. And let me hide the boxes, labels, lines. Okay, I'll just keep the tables, okay? And let's hide the fractals as well. So this is your MMM pool. I'm not going to explain it now. I'm just going to do a brief review on PO4 and deactivate all of them. Okay. However, we have a specific indicator that gives you the MMM candle bias. Okay. So let's put these on the top right. Okay. So the Maserati model, the MMM, we categorize the candles in 6 ways that will help understand what the market is doing, where the market is going, what the market wants to do. So it allows us to have a better understanding, a better comprehension of the market behavior. So, for example, you'll see that you can even start from the monthly. The monthly will tell you something. Okay, bullish. The monthly, you have a bullish affinity plus. As you can see, the market went on top and took the high. So this is our target for the month. The market already took it out. If you go on the weekly was what? A bearish affinity plus. What do we see here? The market went down and took the low. So the Maserati model is based on candle. It is based on price action, nothing else. Candles and price action, that's all. Okay, so but the market is complex in a certain way because you don't know when the market is reversing. You don't know exactly when the market is the reversing, if it's a retracement. You don't know if it's a continuation. So for me, over time, I had a lot of difficulties to understand the market. So when I go on YouTube, I watch a lot of videos, I read a lot of books, I still had all of these difficulties of really understanding the market, really to take a trade. I use a lot of indicators. I basically have tried everything, and then still I couldn't really understand. And then I decided to sit down and analyze the market. I spent hours and hours. I used to be in front of the computer for 22 hours per day. 22 hours. Sometimes I just sleep 1 hour, 2 hours per night because I was so into it. I was like, I need to figure this out. There's no other way. I need to figure this out. I need to really understand what this market is about. And then I started understanding, I started writing down, I started coding as well because I had no idea about coding. I'm a medical doctor, guys. I'm a physician. I had no idea about coding. I had no idea, but I'm so passionate about the market. I'm like, okay, I need to understand this. You know, I don't like challenges, so I put myself into it. I spent like 2, 3 years, like waking up middle of the night, idea in my brain, come back to the computer. I'm telling you, I was spending 15 to 22 hours, sometimes 21 hours in front of the computer. Sometimes my eyes were so red. My wife, she was like, Jesus Christ, you're going to die. You know what I mean? She was so worried about me, but I was so determined. And then that now I feel like I'm pretty much achieving. I'm almost to the pinnacle of my hard work. You know what I mean? So and so I'm going to share every single things, every single insight with you. So if you already took the class can serve you as a base, or you've watched the video, it can serve you as a foundation to understand everything. So you know bearish affinity, bullish affinity. So now they are being integrated into the MMM pool. Okay. So before starting, I'm going to explain the Maserati Model pool, the new updates. The new update is pretty much same as the original. Okay, it's pretty much same. So what are we going to check? We are going to check. Let's say so we have the MMM pool. You know, so if you go on the indicators, okay, you go to invite only. If you have it, you will be looking for Maserati Model Pro beta version because we're still working on it, and we're still working on it to make it much better. It still have a lot of. Yes, Sandra, I'm live. I'm just explaining the indicators now, and you'll see it like that, and you just click on it. When you click on it, you will have the Maserati Model Pro in your chart. Okay, so now what do we see now we have, you'll see first the table will have time frame, which time frame you're in. Okay, and then for example, if you can select a specific time frame to see a specific time frame as 1 hour here, but if you put it on the chart, you'll be able to see. And then you can somehow, I don't know what's happening with this. It's not showing the right time frame. I don't know why. It's stuck on 1 hour. Anyway, I'll check it. What is going on? I'll check what's going on. Yeah. So okay, what we're saying, yeah. So you have the MMM pool. Okay. So first, you'll see you'll have the bearish affinity plus, bearish affinity minus. Now you do not need to be thinking, what is this? If it's a bullish affinity plus, if it's a bearish affinity minus, you will know exactly what it is. Okay, and it will be painted in red or green based on the direction. Okay, based on the direction. But you know other things you need to know as well. Yeah, this is quite strange. I think there's a bug. Yeah, I think I will check it out. I'll check it out and see what is happening. I think I'll fix it today. Yeah, it's not changing. That's very strange. Yeah, but it wasn't like that. So yeah. And then so you will have these time frames, okay, and then you'll have bearish affinity. Bearish affinity means that our target is down, but since if you see bearish affinity minus, it means that the bear are not that strong enough. However, it's still a bearish affinity, okay, but it's a bearish affinity. However, you need to be careful that it's a bearish affinity minus. When you see minus and plus, it means that if it's plus, it means like you have a lot of power. The bear have a lot of power. If it's minus, it means like if the sellers have less power, which means there's a possibility that this market might keep pushing on top of the candle. Okay, in that case, this is what we see here. And then you will have delta, the delta volume. All this information are all about the last closed candle. Okay, the MMM is only based on the last closed candle, because you don't enter a trade when the market, if the candle hasn't closed. Okay, because you wouldn't jump into a high speed train when it's running. You need to wait for the train to stop so you can get in without hurting yourself. It's the same for the market. You cannot enter any trade without waiting for a candle to close to give you the right information about what you need to do. Okay, and then you'll see you have the volume of the candle inside of the candle. However, I'm working on a light version. I'm working on a light version of the MMM, so as well, and I'm working on the MMM Pro as well so I can finish so it can be very effective. And so you'll see you have buyers and sellers. This information, it is based on the previous candle. As you can see, even this candle was a bearish affinity minus, but the power of the buyers and the sellers is the same, 50% each, 50 and 50. Okay, so the market could go either way. Okay, so these will give you a lot of information. And then as you can see here, you see previous candle delta MAR strength. Okay, this previous candle delta MAR strength, I made a calculation. So I took the last 20 candles. Okay, I took the last 20 candles on delta. Okay, I took the last 20 candles delta and I divided it by 100 to give me the strength of the last candle. So this strength is based on the last candle. Okay, and then the live LC mean live candle delta MAR strength. So this is giving you the strength of the live candle. Okay, but you don't really need to use it. It can serve you as a kind of preview of what's going on, but you cannot use it as a final information. Okay, because it's a live candle. LC mean live candle delta strength. Okay, live candle a delta a moving average strength. Okay, it will take the last 20 delta you have in the candle of the last 20. It will take the delta of the last 20 candles, and then it will give you a delta moving average to plot the last candle strength. This is exactly what you're seeing here. So here you're seeing that. So you have a bearish affinity minus. That's the first information you have. Bearish affinity minus, which means that the candle doesn't have enough strength. Okay, the candle doesn't have enough strength, which means the buyers are not that strong to push. The sellers are not that strong in the market because it's minus. Okay, let me put it up there so I can really top. Okay, so see, bearish affinity minus, which means this candle is bearish affinity minus, so this is supposed to be our target. However, since we see minus, it's telling us be careful. This candle doesn't have a clear direction, so the bears are not that strong, which means this market might go up. It doesn't mean it will go up, but it might go up because it's minus, which means there's not enough strength of the sellers. And then when you go down, you check the same candle. You check what is the volume do we have? We have 50% buyers on it, 50% volume sellers on it, which means that this is confirming the minus we're seeing, which means that the sellers and buyers are not that strong. And then when we check the candle delta MAR strength, we're seeing that we have a positive delta with a arrow going up. So which confirm that even this is a bearish affinity, and since we have minus on it, it was telling us be careful. And then now we're confirming that, okay, so the strength of this candle is more higher than lower. So it's much better that we're looking for a trend, like to take a trade that is going to take this high, okay? And then when we check price delivery is bullish. So we have two confirmation that is telling us even this candle is even the delta is, we see the delta is -1, very, 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 very weak. And then which means that even this candle is bearish affinity, but it's a minus. It's a minus, it means the bears doesn't have enough strength. And then we check the delta strength, the delta MAR strength, it's going up, which means we highly likely going up or down. And then this is exactly what the next candle do. It push up. And then you have this here, you can write anything you want on the text here. Second things you have a complete innovation of the MMM block. The MMM blocks stay the same. You will have your external block. The external block, it's an MMM block that make a market stick to change with a body close, and then it will be labeled a MMM external block. Okay, if it's a short, for example, here you have this. You have MMM external block CDS. Okay, it pushed down because it created a market stick to change here at this level. If you want, you can put the show MSA, show bearish, and then so as you can see here, you're seeing the bearish break here, and then this is a external block, okay, CDS, and then so anywhere you see this external block, it means that the market, this is where the market turned from bullish to bearish. This is where the market turned from bullish to bearish. An external block only appears if the market was bullish and then it turns into bearish. If the market was bearish and it turns into a bullish trend, okay? And what's next? And internal block, if you have external block, every single PO for candle you will have, it will be an internal block. So you have this external block here, and then you have a bearish PO for candle here in purple, and you have internal block short here. Here you have an internal block short, it will be turning into purple, but since it's violated, it just deleted. So every single time a MMM internal block or external block is violated, it will just be deleted automatically on the indicator. And then now so you have the bullish MMM block and the bearish MMM block. You'll have MMM block long, MMM block short. Okay, so every single time you see an MMM internal block long, which means you have you had an external block. Okay. And then on the MMM pool, what you'll see again, you will be able to show entry. For example, now it's like just 50. Like if we let's say we put it 1,000, you'll be able to see. That doesn't mean you need to use this. Remember, this is still a beta version. We still have a lot of, because this indicator it's like fully loaded, so it's very, very difficult for the code, like to respond. Okay. But I publish it as a beta version, so you need to use it with a lot. Just be careful, because even me, I still draw my MMM internal block and external block by hand, okay? Because trading view Pine Script is not really friendly in terms of drawing this kind of MMM block and stuff like that. So it takes a lot of thinking, a lot of thoughts to design this indicator. Yeah, and then you for example, when you have an external block, okay, and then you have an internal block, and the market will plot an entry here, okay. For example, if you have an internal block and external block, the market will automatically plot an entry from here, okay, to go down here, okay. But however, you cannot really use this because it's still in a beta version. It doesn't really tell you. It will give you an entry anywhere. It will not really focus on if the market is in premium or the market is in discount. So you need to be very careful about that. So you need to still check the MMPD. Okay, the MMPD is the MMPD and the MMM are the backbones of the system. Okay, so you can decide to have to have your delta MAR length more than 20. You can make it 20, 21, and then it will be just influencing this the table, the delta MAR strength of the last candle. Okay, and then you delta threshold, okay, 70, and then yeah, so this is for divergence, okay. And then if you want to show MMM candle bias lines, for example, you see here, for example, you have, for example, in here, you have a bearish affinity minus. So if you want to draw a line from the high and the low of the candle, you will be able to do it from here. And then you can go here, say show MMM candle bias line, and then based on the chart, it will just plot based on the chart. If you want it in 1 hour, it'll be in 1 hour, right? Even if you go in a lower time frame, it will still show it to you. But once the low or the high is taken, okay, it will stop. For example, here the high is taken, you see, it just stop. It will just stop automatically. And then both this will still keep moving on, so you can see exactly where the high or the low of the 1 hour is. You can use it as well. For example, you can put it in 4 hours. You go, for example, you go in 5 minutes. See, in 5 minutes, you know, okay, in 5 minutes, this is where my 1 hour low is. Okay, this is my 1 hour high, so the market already took the high. Okay, and what's next? And then you can use color bar based on MMM bias candle, which means this will color the candles based on a bullish body close, bearish body close, bullish affinity plus, bullish affinity plus, bullish affinity minus, close inside with bullish affinity, close inside with bearish affinity. So it will color the candles based on that. For example, if you click on it, you see it will color the candle based on that. Okay, and if you activate minus and plus, it will just color the candle based on minus and plus. Okay, minus and plus, minus and plus. It will give you an insight about the real direction of the candle based on the MMM candle bias. For example, here it will tell you you're in a bullish trend, everything is bullish. Here you have a retracement, bullish, 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 bearish, bearish, bullish, 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 bearish, 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 bullish, 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 bearish, bearish. So it will give you an insight of what is happening in the market. Okay, it will give you a clear insight. For example, you can even deactivate the PO4 if you just want to see all of them by themselves. It will just color the entire market for you based on the MMM candle bias. Okay, it will just color everything for you. And then another things we have that I'm thinking to delete as well. So you can choose to use the MMM block. Okay, you can decide to use the MMM block based on market structure change, which is the bearish break, bullish break, bearish break, bullish break, bearish break, bullish break. Okay, or you can decide to use this only focus on the MMM block. It will plot the MMM block based on that. Okay, this is just for the MMM block. Okay, it will just plot the MMM block. Okay, if you choose market structure change or if you choose PDB. Okay, you can go and read more about the PDB and the market structure change, what they are, or you can use them. But you can, if you use PDB, it means that PDB, price delivery bias, it means that you'll be seeing CDL, CDS, okay, long delivery one, long delivery short. The PDB, it gives you more a broad view of the market direction. Okay, so it's like it takes 5 candles to make the calculation and a special formula. Right, and then you can see the 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 MMM. Okay, You can see the MMM indicator, and then so here you will see that in 1 hour, you can as well extend the lines. Okay, yeah, I just kick him out. Wisdom of words, I just kick him out. Yeah. So you have you can extend the bias line. For example, the bias lines, okay, the bias line, you can extend them by 2 or 3. Okay. Okay. For example, you're in the 1 hour here. Okay. Let's go back to the bias line. I want to explain you something very quick. Okay. So let's deactivate the colors. Okay. To have our chart clearer. Okay. For example, in the 1 hour. Okay. In the 1 hour, there's something I forgot to tell you guys. Okay. So in the 1 hour, okay, you will see that you have high and low, right? You have high and low. Okay. You have the high and low, and then, for example, if you don't want to extend the bars all the way to the right, okay, you can just extend it with 2 by 2 or by 3. Okay, for example, when you click extend, so instead of the bar extending all the way there, you can just extend it by 2. It will be shorter. Okay, let's say by 2. Okay, so the bar will be just shorter. You can decide to extend the bar by 3, by 2, by the amount you want. Okay, and then what's next? Okay, so the PDB, it's based on the last 5 candles. Okay, last 5 candles. You have 2 candles on the right, 2 candles on the left. Okay, and then market structure change is just our normal market structure change. You just use the one candle in the right, one candle in the right, one candle in the left, and then that's all. Okay, and then you can have the lines. You can make the lines thicker, bigger. It's all depend on you. Okay, and then what's next? Okay, you will have long labels, short labels. Okay, long labels and short labels. Long labels and short labels, they are all connected with the PDB or the market structure change, which is like bullish break, bearish break, bullish break, bearish break, bullish break, bearish break, right? And then what's next? And then so if you toggle the short and long labels, so example, you see a bullish break and bearish break will just disappear. Okay, or if you put them on, you will see them. Okay, so the buyer's defense line and seller's defense line are from the PDB. So these defense lines are for example, this is a defense line. So these lines are, for example, if the market is going up, you expect the market to be respecting these lines. Okay, for example, me, sometimes what I do, I use them, for example, like when I really want to stay on the trade. So sometimes if I don't manage my trade by candles by candles, I just put my stop loss here, or put my stop loss here, or put my stop loss on here on the defense line. But the defense line as well, they are area with a lot of liquidity, so you need to be very careful. They have a lot of liquidity on them, but however, if you see the market make a break, which means the target might highly likely be the defense lines. Okay, for example, here you see a bearish break. So now if you have a stop loss here, you need to be careful, because this is an area of high liquidity. Okay, but if the market is going up, you have your defense lines. It's a good point to put your stop loss and keep moving on. Okay, and then what's next on and then you have and then you can show PDB. You can show short delivery 1, long delivery 1. Okay, if you can just deactivate them, they will just be deactivated by themselves. Okay, and then you can, however, this is show PDB, show SD1. They are just going to show you the lines and the labels. Okay, but however, remember, if you want to use PDB to see your MMM block, you need to come here and choose PDB. If you want to use market structure change, you come here, you click on market structure change. Okay, and then what's next? And then you can decide to show MMM block. Okay, you just show MMM block. or hide the MMM block. Okay, and then you can decide how many MMM block you want to be displayed on your chart, and then you can only check show only matching blocks. Okay, for example, you will only see the last external block that, okay, for example, if you have if your last external block was a short, it will show you every single internal block short, internal block short, internal block short. If it was a long, it will only show you the external block long, internal block long, internal block long. So, okay, so in that case, you will not see the opposite internal block or the opposite external block. Okay, so but better you keep, for example, you see, you will just delete this, boom, delete, because the last external block in this, the last MMM block was an external block from here. So this is the last one you have. You will start deleting them from this level at a certain level. All right. And then you can, for example, all the option I add, you can decide how many candles you want to see on the right, on the left for the swing. For example, normally it's 3, but you can decide to put it 5. The MSA, you can put it 5. For example, me, I really like to put the MSA 5, and about you can keep it on 3. Okay, you can make it tiny or big. It's all depend on you. Okay, and here you have the bullish MMM block, bearish MMM block, the text. You can decide to really customize them. And then now you see show fractal swing, which is the triangle we see on top of the fractals. Show double fractals. This is the regular fractal and the B William fractal. You'll see both of them. And then you can decide to only see the regular fractal. In that case, you will untoggle this. It will only show you the regular fractal. It will not show you the Bill Williams fractal. But I really advise to always keep both of them activated. And then, for example, you can choose to see PO4C2, PO4C3, and PO4C4, right? Right. And then you can, for example, we know that PO4C2 is the most powerful block. Whenever you see PO4C2, for example, in your case, the PO4C2, the market highly likely took the low push down. Okay, whenever you see a PO4C2, okay, for example, you see this is a PO4C2 bullish. You see, even the market go down, the market is more highly likely go back to take the high. So the C2 are the most powerful PO4 we have. Okay, the most powerful PO4 are C2. For example, here you see a PO4C2, and then the market just push down. You can decide to only trade them. You will have fewer trades if you decide. Do you have recording or you take trades? Yeah, I do have a lot of recordings of my trades. I used to share them, but I don't do that anymore. You know what I mean? Because like some people get, I have a lot of people, they get like frustrated. You know what I mean? When I share my trades or share my wins and things like that. But I do have some recording trades. Yeah, but I can start taking. So I'm planning to start taking, making recording of my trades and then explaining them like in a video. Because now I'm doing them on Discord. So like just live in a certain way, I'm taking the trade. I enter this is why I enter. I share it on Discord. But I'm thinking to make some recording, and then while I'm taking the trade, explaining why I take this trade, blah 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 blah. Yeah. And then so now I'm just explaining the indicators. Okay, but yeah. So as you can see here, so this is a bearish defense line. Okay, bearish defense line. For example, yesterday this is where I took my trades. Okay, this is where I took my short yesterday. This yes, but I took it on NQ, but it's pretty much the same thing. So as you can see, the C2 are the most powerful PO4. The C2 are the most powerful PO4. Okay. Yeah, and then if you want to learn more about what is a PO4, yeah, you can just go on the free webinar, or you can just take you can just buy the class. I had explained more about the PO4 and stuff. And then, but anyway, I will show you exactly how to use the indicator today as well. And then you see the PO4 are the most powerful candle you might have in the market, based on my opinion, yeah. And then so you see the market is pushing down, yeah. And then the PO4 are the most powerful candle, and PO4C2 and the PO4C3 is the most common candle. Okay, the C3, you find a lot of C3 all over the place. So that's why mostly I always keep my C3 activated, but now you can have all of them activated or only one of them activated. Is up on you. What I advise, just go and do your back testing to see what's worked for you. If you want fewer trades with a high possibility of 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 success, you can just choose PO4 C2. But back test again, only choose C3. You can only choose C4. C4 is more like a confirmation that the market is going in a specific direction. Yeah. Okay. So, and then you have the MC2 bull, PO4 MC2, PO4 MC2 bullish and bearish. The MC2 candle this, for example, you see this candle. This is an MC2. When you see this candle, MC2 is just like, for example, if the price was very bullish, and then suddenly you see this candle coming in and it paint this color. It's an MC2, which means like we have a lot of volume bullish. However, there's a lot of volume bearish coming in, which stop the bullishness to develop. Which means now if you're in a trade, when you see this candle, you better get out. Okay, if you're in a bullish trade, whenever you see an MC2, you better get out. Any MC2 bearish, you better get out because the market is not in your favor anymore. This is MC2 bearish. This is the MC, that dotted swing line. How do you get the dotted swing line? These swing lines are just the defense line. Defense line, bearish. This is the bullish. This is the bearish. Okay. For example, you felt this dotted line. When the market is coming in, you might expect a reaction from them because they are high level of liquidity. High level of liquidity, or they can be served as liquidity, or they can be served as like your area of support or resistance. Yeah. And if you see the market is passing them like that, which means the buyers here at this level, okay, are not strong enough to push the market up. You see, price come here exactly to the buyers' defense line. They protected this area, and as you can see, we had a very strong bearish candle here, and then immediately we have an MC2 bullish, which means the buyers entered here with a lot of power, and then this can be related with the buyers defense line here, which this line means you have a lot of buyers here, and the red one means you have a lot of sellers. You see, the market come here, took the high, it took the liquidity and pushed down, and create this liquidity level here, push down. Okay, and then here you have this line again, and then the market pushing when it passing by the sellers defense line, it quashed it. It's like quash it with power strength. Okay, and it created bullish body close on top of it, and you see how this level is holding. Price come, we test it again and pushing up. Okay, so your sellers, sellers and buyers defense lines are very, very important to follow. And then if you want to deactivate the fractal, for example, the triangle, you just click on the fractals, you deactivate them. And if we want to deactivate the show double fractal, you just click on them. But the calculation is still in order. Me, I like to have my chart very clean, so I can just have it as it is. Okay. And what I was going to say, I was going to talk about something specific. Yeah. Okay. For example, we have PO4. We have PO4, C2, C3, C4. I'm going to tell you exactly what they stand for. For example, you have, okay, let me take this example. This is a very nice example. I think this is a C2, if I'm not, I want to have all of them in the same place. C3, C4, all of them in the same area or same place. Okay, yeah, here, this is a perfect example. Perfect example. Even though this is not a C2. However, okay, first thing first, the first candle before a PO4, if it's not a bullish body close, for example, here, you see the market is pushing down, and then you have an MC2. The MC2 means we had a lot of bearish movement, a lot of bearish volume going down. However, the bearish volume couldn't sustain itself, couldn't really hold himself. And then so the bull came in with power, and then you have an MC2. The MC2 means we were bullish. MC2 bullish means we were bearish with a lot of strength, bearish, and then MC2 bullish come in, which means we are no longer have enough power to sustain the bearishness of the market. A bull came in with a lot of power, and then that's why you have this MC2 bullish. And then next one, you need confirmation that this market indeed is turned from bearish to bullish. So this is the moment you know, okay, you have a bearish break here, yes, and then you have an MC2. Okay, this market is no longer looking to push down. Even when you have the bearish break here, we highly likely pushing up. However, you need confirmation. And then so next candle you have a C3. Okay, you have a C3. Okay, so this C3 candle, if the C3 candle represent a kind of confirmation of the market. Okay, I call this scenario a plus plus. And then next you'll have a C3 and C4. This is the C4. The C4 candle is the candle that really tells you, yes, we are looking to push higher. The C4 candle is a confirmation. When you have a C4 candle, this is the moment you expect the market, and if the C2 and the C4 created an unfair pricing gap, you see this unfair pricing gap here, created an unfair pricing gap. So you expect the market to come in and then react from this level, okay, to confirm, react from this level, and then you wait for the next PO4 bullish to really confirm that we are pushing higher, okay? So if you want to take the best trade, okay, best trade is that you wait for your PO4 C2 and even your PO4 C4. Back in the time, I used to trade only with PO4 C4, with the C4. Back in the time when I first was developing this indicator, I was only trading on 15 minutes, PO4 C4. Okay, PO4 C4, only the C4. Okay, but I realized that the C2, so now you'll have C1. Okay, this is like a C0, and then you have C2. Okay, and then C2 highly likely, but this is not a C2 because it's not a bullish body close. However, it's still called C2, but it's not a PO4. Okay, it's not a PO4 C2, but it's a C2 candle. It's like means candle number 2 after we have a sweep. Okay, we have a sweep with the liquidity is taken here, and then market is pushing up. And if the C2 or can form a unfair pricing gap with the C1, this is your best confirmation that price is highly likely pushing up. However, you cannot enter any trade without confirmation. You need to wait for your PO4 bullish or your PO4 bearish to really confirm the market is going up or down. As I say, I see a lot of people only trade with the unfair pricing gap. I like to call them, because for me is the market. For example, this is a perfect distribution of the market, because the market, we are not supposed to have hole in the inside of the market. We're not supposed to have any volume imbalance, any fair pricing gap, okay, and any opening gap. When you see this gap in the market, there's unfairness. If there's unfairness, the market needs to correct the unfairness. So that's why I call them unfair pricing gap, okay? Because if the market is all about fairness, okay, so we cannot have hole. So for me, these hole are not fair value. They are unfair value, because there's a side of the market. I think I already explained this, why I call them unfair pricing gap. And then it's easier for me to understand, okay? I'm not just like changing the name. It's just for me easier for me in my brain, the way I see the market, the way I've been observing the market. The market is all about fairness. The market is all about exchanging, allowing a fair exchange between buyers and sellers. So we need we need to know that these gaps are unfair. They are not supposed to be exist. They are not supposed to be present in the market. They are not supposed to exist. So, but however, we don't know what the reaction will be when the market come back into this unfairness. We don't know what the reaction will be. For example, you see some people will be telling you when the price comes out of the unfair pricing gap, put your entry here. But I don't I don't really advise you to do so. Okay, so wait for a reaction that is telling you price is pushing up. Okay, for example, here you know, okay, highly likely price might react from here, but what is telling you, if you do we have enough buyers here? You don't know, because there's a lot of information you don't have. You only have what you see in front of you. Even you have a lot of volume here, you don't know if price will react to it, or you don't know if price will pushing down. Okay, so you need to wait a confirmation. What is your confirmation? This candle here, a bullish body close and a bearish body close are the most powerful candle you have. A bullish body close is telling you price will push up. A bearish body close telling you price will push down, because it's telling you that people are willing to buy more even price is higher. They're willing to keep on buying. But once you see market is not making any more bullish body close or bearish body close, or price is not creating only unfair pricing gap, it means that this side of the market is not willing to keep on buying, or is not willing to keep on selling. You know what I mean? For example, here you see this big push, okay, and then you see this market closing side. So there's no correlation between these two candles, because if we have this big push, we are expecting the market to keep pushing up. However, the market create an unfair pricing gap. Since it created unfair pricing gap, it is telling us the bulls are very strong. Sorry, and they keep pushing up, but they can't really, you see, no bullish body close, no bullish body close, no bullish body close, but the market keep pushing up. No bullish body close, no bullish body close. You have your last bullish body close here. However, this bullish body close is an MC2 bearish. It's telling you, okay, see, this is a bullish body close, but it's an MC2 bearish. It's telling you that this candle doesn't have enough power to keep pushing up. And then what the market did next? Market pushing down. Because what? Because you see the market couldn't really make any bullish body close after this candle. Okay, see, none of this candle are bullish body close. And the last one, which is a bullish body close, we were expecting price to keep pushing up, but price created an MC2 bearish. That's why I created the MC2, to allow you to see where the market is not in your favor. For me, I'm going to show you exactly how I move my stop loss, because the MMM I created in a certain way that once you place a trade, you should be in profit immediately. Because when you're entering a trade with the MMM, you're entering restraint. We're entering a trade that needs to keep pushing. If it's not, which means this market is not in for favor, or your execution wasn't perfect, and then you will know exactly. And then bullish body close, it's in your favor. There's no bullish body close, you better prepare yourself to get out, because it means the market is not in your favor. Because we are like nothing in front of the market. We are like nothing. We are not even like a grain of sand in the market, because we cannot move the market. But we need to know where the people moving the market, where are they? What are they doing? So we can be with them, we can go along with them, and then we can make some profit. This market is not about you're smart. It's not about you're the best. No, it's not about that, because you cannot move the market. You're here to make profit. Whatsoever profit you make, it's yours. Don't give it back. Okay, so that's why you see me. I will be like moving my stop loss on every single bullish body close or bearish body close, and I do not care. If I make $1, is $1 more. If for example, my bullish body close, I entered this trade here, my stop loss is here. Market doesn't give me more bullish body close, my stop loss will be here. Once the market gives me a bullish body close here, I put my stop loss here. Or I'm like, if I see the market is like up and down, okay, I move my stop loss. But I'll teach you more when I start explaining the MMPD, right? So, and then the MMM, there's only one thing he asks you. You wait for a market switch to change an external block. Okay, for example, here, you wait for an external block. Okay, you have a market switch to change here, you have an external block here, and then you have an MMM internal block here. Okay, and this is your entry is here. midline of this candle. Boom, push up. Okay, so this is your entry there. The MMM is very simple: external block, internal block, and then you wait the market to retrace back. However, it's very difficult sometimes to know which one will work, which one will not work. That's why we have the MMPD, which will be telling you where to buy. If you need to buy in premium, okay, or in discount. If you need to buy in discount and sell in premium, okay, or buy in overbought, you need to buy in oversold or sell in overbought, because these levels are the best levels that you can buy. For example, if you see yesterday on my Discord, I was saying I don't think this market will go down now. Even I saw the market is pushing down with strength. What did I tell you at 9:30? I say, do not worry. This market is not going down now. Okay, this market highly likely keep pushing up, because the 1 hour is a retracement, and then based on the MMPD, we need to keep moving up. Why do we need to keep moving up? Because we need to bring this market to overbought. We need to bring this market into an area of high liquidity. Or did you get that pink band on the C2? This one, you mean? This pink band is just a rectangle. You made this band? Are you talking about this band? I just placed it with the rectangle on TradingView. This one. Okay, I just marked the unfair pricing gap with a rectangle. Okay, it just TradingView. See, you just TradingView. Yeah. So you just wait. The things is very simple. External block, internal block, external block, internal block, premium discount. That's all you need to know. And then you just need extra confirmation. Okay, you go, you check your delta, MAI, you check the strength of the market. Is the market is my advantage? Yeah. Everything's connected. Yeah, and then you take the trade. You only trade. No, it didn't came automatically. Yeah, that's all you need to know. Easy peasy. And then you do just back test. And back test. That's all. That's all. So the MMM Pro, we're just telling you where. So see, the PO4 are just candles, powerful candle that tells you where you have a swing high or a swing low, where highly the market might turn. But you cannot use all of them. You need to use specific one of them. Specific. They need to be specific. That's why you need to do your analysis on higher time frame. Right? So, do you have any question about the MMM Pro? I think so far I explained everything about it. And then and then see, the market is simple. PO4 bullish. You have bullish break. You have your bullish break here. Okay, bullish break here. For example, here I'm giving you an example. Let's say you're looking to take a loan, and then you have a bullish break, and then you have your external block here. If the market doesn't give you an internal block, you don't enter an internal block. For example, here you have a PO4. Okay, you have a PO4. You have a market stick to change created here with a bullish break, and then you're waiting for a PO4 internal block. But the market took this low without giving you internal block. This is not valid anymore. You wait for another bullish break, and then now the market is giving you what? Based on this PO4, the market gives you an external block here, and then you use this external block, okay? And then use this external block. So this is your external block, okay? This is your main external block. And then what you're looking next? Okay, you're looking for an internal block. And then so what the market do? The market create a market stick to change with bearish market stick to change here. However, it didn't create it with a PO4, which means you just ignore it, and the market gives you a bullish break. A bullish break, and it gives you another internal block here. And then plus this internal block is a CDL, which means it create a market stick to change here. So where do you enter? Just here. As simple as that. As simple as that. You don't try to enter around here because you have no confirmation. And then you check if your stop loss is 1, 2, you target 1, 2, 2. Boom. You target 122. Don't be greedy. If you are going to be greedy, move your stop loss on the every single bullish. Once you get your 122, move your stop loss on the every single high or low of the candle. Okay, I will let you know, Pradeep Shankar. So this I will explain the MMPD. You need, guys. I'm going to explain you the MMPD. The MMPD, you need to master every single things I'm going to tell you. Every single thing to get this precise entry I'm getting. You need to understand the MMPD. You need to master it. You need to study it until it get inside of your brain, and it will help you understand the market like in a crazy way that you would be like, oh my gosh, oh my gosh. It would be like a miracle. Okay. So that's all you need. That's all about the MMM. That's all you need to know. Okay. So I think that's all. And then let's go now. Let's go explaining the MMPD. Okay. Let's explain the MMPD. Once again, I'm going to download something so I can show you. Export. I'm going to explain you first everything about the MMPD in one. I already share a diagram with you, but I will show you a diagram, and then second, I will explain you everything on the diagram, and then after that we will switch to the MMPD itself. Okay, let me go and show this. Okay, can you see this diagram? Okay, if you can see it, might be okay. Let me just zoom in. Oh, it doesn't allow me to zoom in. Oh. Once again. I don't know. Can you really see the diagram, guys? Is it let me have Test. Can you hear me, guys? Can you hear me? Can you hear me, guys? Can you hear me? Remove the chat. Maybe some conflicting application with mine. What about now? Now, hello, hello. Can you hear me, guys? No? Oh, you can hear me now. Okay, so now I'm going to load the chart to see if it's because of this. Can you hear me now? Can you hear me now? Can you hear me now? What about now? Can you hear me? Can you hear me now? Good, good, good. Perfect. Amazing. Awesome. Yeah. That's great. Okay, I think because I hide my image and I had my video so I could see if I could show you much better. Can you see the lines very well now? Is it possible to see them very well? Can you see? Okay, great, great. So now I'm going to explain you. What I'm going to explain you now, this is one of the most important things that you need to really master, study day and night until it became part of you. Even though even though that I put them on the chart, but you need to study them so you know they became part of you, okay, instinctively. All right, so you need to master, like, master it, master. Okay, it's very, very important. Okay, so a red MMPD candle, okay, the MMPD, you see there's red candles, okay, let me just show it as well. The MMPD, you have red candles, okay, let me just hide the table. You will have red candles, okay, red candles, pink candles, green candles, and pale green candles, okay. Let me explain you exactly which one is which one, okay. Let me just keep the MMPD candle for now, okay. For now, let me get the Supermax train background, only the MMPD candle, only them, okay. If you see, I'm showing you MMPD. So all the red candles are bearish candles. They represent bearish trend, bearish candles, bearish momentum, anyway. When you see the pink candles represent bearish retracement. So this is the red candles represent bearish strength. Pink candle represent bearish retracement. You have the green candle, they represent bullish candles. Pale green represent bullish retracement. Okay? Remember, we only have 4 candles on the MMPD for now. Red candle, pink candle, green candle, pale green candles. And then on top, you will see these red candle that are between the 100 line and the 90 line. This candle represent bearish body close. Every time you see this candle, it means we have a bearish body close on the chart. Every time you see these candles, it means we have a bearish body close on the chart. Every time you see these red candles, it means bearish body close. And every time you see these green candles, it means you have a bullish body close on the chart. This line in the middle is it's a 50 line. It's the 50 line. It's a line that separates the MMPD range into one up and one down. From this area, from the 50 lines to down, this is a bearish market. From the 50 lines to up, this is a bullish market. Okay? When the market is between the 50 lines and the 80 lines, you have a bullish market. You can still enter the market if the market is around here. Okay, even if it's in premium, which means this market is in your favor. This market is in a bullish trend. Okay, once the market start touching the 80 line, the 90, the 80 lines and the 90 lines, this market is in a high bullish premium. Okay, high premium. Okay, this market is extremely bullish, extremely expensive. Okay, which means if something is expensive, less people are willing to keep buying it. Less people are willing to keep buying some things expensive. Once this market start touching 80, 90, if you're in a trade, start moving your stop loss to protect your profits. Okay, because at one point the market will either retrace, as you can see this pale green here, or reverse when you see this red in premium. Okay, or in a buying area. Okay, so, and when you see these purple candles, these purple candles represent institutional selling, which means they are selling or they are taking profit. The big guys are either selling or are they taking profits. And however, the institutional candles, normally when they are selling, they don't really want you to see when they are selling. And then when they are selling, if they have $1 million, they will divide this $1 million to sell it in 10 times, like one by one. That doesn't mean when you see these purple candles, it means you to enter the trade immediately if you went looking for a trade and if you don't have confirmation. It just means that you have institutional pressure. They are selling or they are taking profit. Okay, selling or taking profit. These big guys, they always want to sell where the price is the most expensive. You want to see when they're doing it, and they will never, if they want to sell $1 trillion, they will never sell it right away in one go. They will divide it in chunks, little by little. So the MMPD help you to see where these guys are selling. Okay, that's all. Okay, and then this box is the premium box. When you see this market inside of this box, it means that this market, you need to see bullish body close to stay on the trade. You need to keep seeing. Once the market start touching this area, the market is not your friend anymore. The market might reverse, or the market might retrace at any time, any moment. Your best friend when the market is inside of the premium box is bullish body close. You want to see bullish body close. And however, when you see bullish body close, the market is trending. So this area between 90 and 100, it means the market is trending. But if the market is trending, we need to see strength. We need to see power. We need to see bullish body close, bullish body close, bullish body close, bullish body close, bullish body close. And same for bearish. When you see the market is entering the 20 to the 10 box, which is the discount box, you want to see bearish body close, bearish body close, bearish body close, and embrace yourself for any case scenario. There's no more bearish body close, and you will see the bearish body close on top of here. Okay, for the bullish body close, you will see them here. Okay, so, and then if you can check out the chart, you see, let me go. If you check the chart, you see we are in premium. This is your friend, bullish body close. It needs to be bullish body close, bullish body close. You see the market, you see, since the market entering premium area, even the market is pushing up. We can say we have an uptrend here. You see, the market entered the premium area from here. Since the market entered the premium area from here, okay, I will say from here is the first time we touch the 50 line. We see the first time we touch the 50, the premium box from this candle here. This candle is the first candle to touch. What do you see? Difficulty. Bullish body close, retracement. Bullish body close, retracement. You see, the market is having a hard time to keep pushing up because why? The buyers and the sellers, they are discussing, should we keep pushing or should we keep pushing up or down? The buyers are asking, should we sell what we have? Or should we keep buying? Do we need more buyer to get in? When you see the market is doing this thing, check the market is in discount. And your only best friend is in premium is bullish body close. When you see the market inside of premium or mostly inside of the box inside here, you need to see bullish body close. Every single time the market gives you a bullish body close, you remove your stop loss. For example, you see here, this is your best trade. You enter, look at this market. You enter here, bullish body close on discount. This is your best entry because you want to buy something cheap. You see, the market is giving you what? Bullish body close, bullish body close, bullish body close, bullish body close. You see, once the market start touching the box, you see, the market start losing strength. You see, the market start touching the 80 line. It touched the 80 line with a huge candle. Okay, cannot really give you another huge candle again. You see, the market starts struggling because once the market arrives, it's in a super expensive area. So the market needs to retrace or the market needs to reverse. What will characterize a retracement? These pale green candles. Okay, these pale green candles characterize a retracement. Okay, so and then what you see, the market start having difficulty to push up like it was pushing up from this level here. You see, the market is going, but the market never gives you a pale candle. So, and the market push up, bullish body close, which means the market is in your advantage, bullish body close, and then the market can't keep up because the market cross above what? Above 100. When the market is crossing above 100, you can be sure that the market will have a huge reaction. The market, yes, if the market is in a premium, you should expect a pullback or a retracement. That's why you see yesterday, I was looking at the 1 hour. I was saying this market will keep pushing up because we need to go into premium because the market was bearish, right? I was looking for a bearish trade. And then the 1 hour, we had a bearish retracement. And then because this candle were pale green. So I'm like, if this market wants to go down with power, with strength to take this low, we need this market to push into premium at least to 80 line. Okay? What do you see? Reaction. Since the market crossed 100, you see, the market, if you this huge bullish body close, what do you expect? Another huge bullish body close. No, but the buyers now, they are reluctant to buy because what pushed the market? New buyers coming in. New buyers coming in. Every time, what characterizes a market that new buyers getting in? When you have bullish body close. More bullish body close you have, more people willing to buy expensive. More expensive. For example, Louis Vuitton. More they put Louis Vuitton higher price, more people willing to buy. They don't care about if it's expensive or not. It's the same for the market. If people are willing to keep on buying, they will buy whether the price is super high or not. So this is how you make money. Okay? Because they feel this price, even if it's expensive, it's okay to buy. So the MMPD is giving you insight what the price is. We are very expensive. When we are in this expensive area, you just conserve every single profit the market is giving you. You don't think, forget about your 1 to 2, your 1 to 3, your 1 to 4. Take what the market is giving you. The market is giving you $1, take it. Once you're in profit, don't give your profit back to the market for they say, oh no, I wanted to touch my profit. It doesn't matter. Your main goal in this market is to do what? Protect your capital at all costs. It doesn't matter if you make $1. It doesn't matter if you make $2. It doesn't matter if you lose $2. As long as you protect your account the most you can, this is your main job. This is your main job, is to protect your account at all costs. The MMM is designed to help you see what the price is doing, what the market is doing. And then when you see the market, when you see this green candle keep on going, the market is still in your advantage. When you see the market start making pale green candle, it means the market highly likely reverse. What I do sometimes, I'm like, am I willing to sacrifice my profit to put my stop loss under the last bullish body close, or am I just going to put my stop loss just under the pale green? Because if the market is in your advantage, the market will keep pushing up. So me, normally what I do, when I see a pale green, I'm like, okay, I don't care. I put my stop loss. I protect like I showed you yesterday. I saw a pale green, I just moved my stop loss. I said, whatsoever the market wants to do, that's the problem. Me, I get my profit already. I don't care. You can get in again. But for example, if you enter this trade around, let's say you enter this trade around here, and then you come here. Do you know when the market is retracing here? Will this retracement go down all the way down here? You don't know, because the market is uncertainty. You don't know how deep the retracement will be. You don't know if this retracement will take your stop loss. You don't know if this retracement will convert into a reversal. You don't know. So the only thing you know is what's in front of you. The last candle close is your friend. If the MMPD is telling you, okay, price is in high premium, extreme premium, this extreme premium, this green bar is extreme premium, I think I should change this to red instead of green. Red, and put green down here. Yeah, extreme premium, which means the market is highly likely reverse or retrace. And then this green candle is telling you we are into a bullish retracement. Put your stop loss here. You don't care. Market here, you put your stop loss here. If you want, and you say, okay, let me just target this high. Okay, let me just target this high. Unless you want for the market to retrace with you all the way down. But me, I don't trade like that. The market is giving me I take what the market is giving me. When the market wants to give you a lot, it will give you a lot. If the market doesn't want to, don't push the market. You don't move the market. You are nothing. You are nothing. You don't even exist. They allow you to participate in this market, so you need to know how to take advantage of the favor they are giving you to participate in this market. But you need to understand how they run it. And then see this green candle, and then now we get outside of the retracement. When you see a bullish body close with a green candle here, which means we are outside of the retracement, this candle is confirming the retracement. So when you see this, your stop loss will be immediately here under this low. No question asked. Because this candle cannot be violated. Like I showed you yesterday. Yesterday, you saw I entered a trade. Boom, after a resumption. Even the market went exactly to my stop loss. It pushed up. Well, I'm like, I don't want to stay in the trade. It was consolidating too much. So indeed, if the market were to take my stop loss exactly under here after the resumption, I would have lost like $14,000. Yeah. And then I just let it go because the MMM told me this is a bullish resumption. If the market is in my favor, the market will respect the bullish resumption. See? You see? Do you see how the market respect this candle? You see? You see how the market respect this candle and keep pushing up? This is your bullish resumption candle. Because the first time the market retraced, this is the candle that took over the retracement. So this confirmed that the retracement is over. Even the market tried to retrace again. This is your first retracement in this bullish trend. The market is respecting it. And then what the market is doing, the market push up, another retracement again, the market retracement again, and then you have a second resumption, this bullish body close with a green candle, and then market is pushing up. The market start retracing here again, 1, 2, and then you have another bullish resumption here again. This is your third bullish resumption. And the market can't push up because to confirm the bullish resumption, another unfair pricing gap, another bullish body close. Okay, bullish body close. Okay, but however, the market came down here, didn't violate the second resumption, didn't violate the third resumption. The first one, second one, third one, and here the market make another resumption because we have here. What do we have? Okay, the market never made a resumption here, so the market never really make another retracement here. Okay, this is not a retracement. So this is a resumption. Okay, but after that, the market market made a retracement here, and then we have your. Let me open this to see. I can see. Okay, yeah, you have a retracement here. Okay, and then what do you see? The market took over out of the bullish resumption, and then what the market is doing? Market is pushing up. Okay, and then give you your 1 to 2. If you were to enter here, on this trade, you will have your long here, and then let's say your stop loss on the swing. And you were to hold, you will have 1 to 2, even 1 to 3, even 1 to what? 1 to 4, yeah. And then you will be like, okay, let me target this liquidity level. Done. Or you can target this area here, you target this liquidity level. It's up to you. Okay. So basically, and then so the market is making what? Retracement, resumption. Retracement, when the retracement is over, a bullish body close will confirm the resumption is over, and the low of this candle needs to be respected if it's a bullish candle. Okay, what do you see? The market pushing up, the market is making bullish. You see, even this candle is a huge candle, but it's a retracement, bullish retracement here. It's telling you we are facing a bullish retracement. You see, none of this candle can really close bullish body close anymore. And what do we have? Retracement, boom, institutional candle, and then you have a red candle with bullish body close. This is the moment you say you no more inside of this market. Okay, you are not inside of this market. When you see this red candle, bullish body close, or a PO4 bullish, normally you might see this candle with a PO4. You see, PO4. Here you're out. No question asked. You're out. Okay, and then you see, because the market needs to retrace, the market needs to go back into discount. So the buyers can say, okay, the price now, we were very high here. Price wasn't really attractive. We need the price to go down. And then what price did? Into discount. What do we see price did in the MMPD? What do you see here? Price came exactly into what? Into discount. Meanwhile, we are still in a bullish trend. The market is still trending. Price came into discount, and then you see this pink candle, and then you have a bullish body close with telling you, okay, we're going higher. This is how I make my entries. And I see this pink candle, bullish body close, boom. I don't care. You know, price is moving with you, but it is very slow. But even if it's moving very slowly, but what? You put it long here. Stop loss here. Okay, and then this is the bullish resumption. That price never come back to violate it. And then what? Price is moving with you. Even I wouldn't stay in this market, 1 to 2, you get your 1 to 2. Once the market put in profit, you just move your stop loss. You put it in exactly in profit, and then keep the market moving with you and see where the market is driving you. You know what I mean? As simple as that. Yeah. So basically, and then you have the. Let's go back here, and then this is the midline, and then you have the bullish body close down here, and then you have the discount box. Okay, this is the same thing. When you see the price come inside of it, expect price to have a reaction. Okay, and so these institutional candles, and then you will have Yeah, and then you have the HVC. This, when you see this long red bar, this is the HVC, which is highest volume candle. These candles with a lot of volume. Not only they are bearish body close, but they have a lot of volume inside of them. So you expect price to do what? To keep respecting them. You see, bearish body close, high volume, bearish body close, high volume. You want to see the market keep pushing. You don't want the market to close bullish body close above these candles. Okay, you want the market to keep respecting them. You see. These are your two candles. I'm going to show you the high volume candles. Okay, this is your first high volume candles. Let me make this bigger. And then this is your second highest volume candle. Okay. Okay, second highest volume candle. What do you see? Price came into this high. What do you see? Respecting it. Took the liquidity here, push down. Okay, push down, push down. What do you see again? Price, we touch it again, push down. Price came here again, try, boom. And then finally move up on top of it. This is the moment you know that price is not in your favor anymore. And what do you see here again? However, you have this down here as well. For example, you have this HVC here. And then you have this HVC here as well. Right, is it this one? This one is an HVC. You see, price violated this HVC. And then you have another one here. Oh, just clone it. Sometimes this is giving me a headache. You have another one here in this candle, another HVC. What do you see? Price close above it with a bullish body, because this is the moment you know that price is not in your favor anymore. This is the moment you know bullish. You have a HVC bullish break in this on this candle. HVC bullish break. So this is your HVC bullish break, which means this price is no longer willing to go down. And then you have HVC bullish break. What do you see? Price keep pushing on, because we are using volume to frame the market. Price respecting. Even though price came back to the previous HVC, you see, price violating again another HVC here, which means this price is bullish. And what do you see on the MMPD? Institutional entering. This is the clear sign that institution wants to. I will explain more about the MMPD. It is just like a kind of foundation, but I will explain you exactly what to expect from each MMPD candles. No worry. And then what you see, and then price came back, reacted to what? To this area here, and then price pushing up. Okay. So now let's go back to our MMPD. Okay. And then so where the HVC bullish will be exactly the opposite. HVC bullish. I don't see any of them. I don't see the HVC bullish. Oh, this is HVC bullish here. Not really. This is institutional. I don't see HVC bullish. We didn't have any HVC bullish. I think the market was very bearish. Okay, this is HVC bullish. This blue candle is an HVC bullish. Okay, this is an HVC bullish, and what you'll see. Let's go. Let's see if. Oh. So you see, this is your HVC bullish here. What do you see? HVC bullish here, this candle. And then what do you see? Price close down here with what? Bullish, bearish body close. What do you expect? Price to keep pushing down. When you see price retest the candle that make the HVC bearish break, price retest it. And what did price do? Pushing down. Just based on these little details. HVC bullish needs to be respected. We cannot have a bearish body close below an HVC bullish. As simple as that. It works in 5 minutes, in 1 minute, everywhere. Bullish, bearish body close on the HVC, you no longer have a bullish market. So, and you see, price retest it, push back. Retest again, push down. You see, or price push down, just based on the HVC. And then you connect it with the MMPD, you connect it with the PO4, You see, P04 bullish. What do you have here? Market stick to change. Bullish market. Let me take the table away. What do you have here? Market stick to change with what? Bullish body close, bearish body close. You have a P04 here. You have a P04 bearish here. Isn't it a P04 bearish? Yes. P04 bearish. Okay. You have a P04 bearish here. This is your MMM external block. Short. MMM external block short. And then what do you have here? MMM external block long. Here, you're a clean sign. The market doesn't want to keep pushing up. MC2 bearish. And then what you do? Again. And then what? And you wait for a retracement. For example, price is moving here. Okay? You wait for a retracement. Okay? Wait for a retracement. And then what the price do? Boom. You have your external block here. Price retrace. Pink candles. Internal block. What price do? Price retrace to it. Where do you enter? Middle of the candle. What are we seeing? Price is pushing down. Are we still in this premium? Yes. And then what price did? Boom. All the way down. All the way down. Price we touch again, pushing down. We touch again. Every time. You see? Price came back into premium again here. What do you have? Another trade. You have another internal block. See? In here. Price, retrace, never came back to premium. Where price really come back into premium? Here. And even price came into premium here, it never gave you a P04 bearish. There's no P04 bearish here. Here you have a P04 bearish, but the price is still in discount. And then here, when price we touch this level here, you have a P04 bearish. Okay? And then, but this P04 bearish doesn't really push down because it is just a retracement. Okay? It's just a retracement. Where do you have your price going down here? You have the confirmation here. P04 bearish, MMM PD red. Yeah, you can do it. I have an indicator that do exactly that for you. This indicator, it's called, wow. If you check the indicator, this indicator is called, where is it? Highest volume candle analysis. This indicator. This indicator will be marking the HVC for you. See? If we go back here, no, this one is not the one. Oh, here, this one. I haven't published this one. This is the indicator. You see? This is marking the HVC for you. Okay? HVC bearish, HVC bullish. You have an HVC bullish break here. Okay? You expect market to react from this level. Okay? As simple as that. Okay? As simple as that. But I'm still working on it. And then, yeah. So HVC bullish break, HVC bearish. And it will give you the amount of contract you have on each of them. All right? For example, here, what I'm saying that you cannot really use the entry here if you're not going to enter. You just use it as a confirmation that whole, for example, if your stop loss is $500, just use it. It will tell you exactly how many lots you need to enter this trade. Just that. Use it only for that. But you cannot take this alone where price is in premium, in extreme premium. What are you expecting here? You expect price to do what? To push down. So you wouldn't enter along here. That's why you cannot use this indicator if you don't. You cannot use the long and short if you don't have a proper analysis that you're taking a long trade, and then you will never take a long into extreme premium. A short, you will never take a long into extreme premium, right? So you only use this indicator when you're about to take a trade, and if it print, it will tell you exactly how many lots you need to enter the trade based on the amount of money you want to risk. Remember, this is not financial advice. You need to go back and test and retest what I'm saying. And this is not financial advice. You would need to test and retest and take your own decision. Okay? Um, okay, and then let's go back to the MMPD because we need to focus on it. This is the most important indicator you need to understand, that has a lot of things that you need to master and understand. I think I explained the foundational, and then now I'm going to explain you every single candle. What do they mean one by one? So I don't need to. I will explain you everything on the MMPD. No worry at all. I will explain you everything one by one. Now we are focused only on the candles. After the candles, I will explain you everything, how to use everything. Okay? No worry at all. Okay, so now let's go back to here. Okay, so B, here, as you can see, we have the bear MMPD, bear market, MMPD for a bear market, MMPD for a bear market. Okay, what you're seeing here, if you have a red candle on the MMPD, can you see can you see this? Can you see this, guys? Can you see it? Anyone can see what I'm saying? Anyone can see these candles? Red MMPD candle. If you have a red MMPD candle, a red MMPD candle needs to always be coupled or together with a bearish body close. These two, when you see them, it means the market is in your favor. Red MMPD, bearish body close. Red MMPD, bearish body close. Red, bearish body close. Red, bearish body close. It means the market is in your favor. This is the normal thing. Red MMPD, bearish body close. Green MMPD, bullish body close. When you have a red MMPD, you see a bearish body close, it's a strong bear market. The strong bear market. Okay, because it makes sense. This is the norm. This is normality. This is what's normal. Red MMPD, bearish body close. Red MMPD, bearish body close. It's a strong market. When you see a red MMPD, you say a non-bearish body close. It's a weak bear market. For example, if the candle is any other candle that is not bearish body close and not bullish body close, any other candle, when you see a red MMPD, the market is still bearish, but it's a weak bearish. I'm going to show you an example of that. Okay, let me show you an example. Red MMPD, for example, here. You see, bearish body close, red MMPD, bearish body close. It's a strong bearish market. Okay. Red MMPD, this is not a bearish body close. This is not a bullish body close. The market is still bearish, but it's a weak bearish candle. It's a weak bearish market. Okay. Remember, with MMPD, it's a strong bearish candle. When you see a red MMPD with a candle that is not bearish body close, it's not bullish body close, it's a weak bear market. When you see a red MMPD with a candle that is not bearish body close, not bullish body close, again, even if this candle is green, if this candle is black or red, it doesn't matter. Red MMPD needs to be bearish body close. If it's not bearish body close, any other candle, it means a weak bearish market. If it's a bearish body close, it's a strong bearish market. Here again, you have a red MMPD. Since the market was still bearish, even you have this candle, bullish body close, bullish green candle, black candle, or red candle. Even you see this candle, the market was still bearish. That's why the market gives you another bearish body close, which is a red candle. Once you see this candle turn to pink, it means bearish retracement. Okay, let's not get into this detail now. Let's go back in here. Okay, so if let's go back here. If you see it's a weak bear market, when you see a red MMPD, with a bullish body close, okay, a red MMPD with a bullish body close, a red MMPD with a bullish body close, it means a potential bullish trap. Okay, red MMPD with a bullish body close, it's a potential bullish trap, which means they want you to take a trade going down, and then after that the market highly likely come back to where it needs to go. So you need to do what? When you see this candle, you do not enter immediately. It's a high, you will see it's a potential bullish trap. You need to wait for confirmation. If after this candle, you can have thousands out of candle after, what you're looking to confirm is that is the trap will be confirmed. If you have another, if you have, for example, remember this a red MMPD candle, okay? A red MMPD candle. And then you have a bullish body close immediately. Okay? Oh, needs to be she's job confirmed. And then if you have a bearish body close, okay? A bearish body close would mean this was a trap because you have a red MMPD with a bullish body close candle. It's a trap. They want you to take a long in a bearish market. And then once you see a bearish body close, it confirmed this was a trap because the bear took over this bullish body close you saw. Okay, this MC2 candle, you might see a lot of example with MC2. Okay, not all of them, but a lot of the MC2 will be, you'll have this pattern. Okay, for example, I don't know if sometimes you're trading and then the market is going up, and suddenly you have a huge bearish body close candle. And and then sometimes you enter in the market, and then boom, you have a bullish body close candle immediately. So this was a bearish trap. So the MMPD will be able to tell you if it's a bearish trap. When you see this case scenario, do not enter. Wait to confirm if you get another bearish body close, it was a trap. If you have a bullish body close, which means it wasn't a trap, they will have a bullish momentum continue, which means if you have a huge bullish body close and then huge bearish body close after that, okay, the momentum will continue. Okay, the pink candle, let me see if I can see an example of the trap. Normally when I'm doing this kind of thing, I just come in front of the chart. I just do everything on the chart. So it's not like I'm doing things like I'm picking I'm not cherry picking. I just do things live. Let me check if I can see a red candle, a red MMPD with a bearish body close. This is not. With MMPD, this is not. With MMPD bullish body close, this is not. If I can see a good example, red MMPD bullish body close. Red MMPD with bullish body close. They are very rare, but they do exist. When you see them, sometimes you experience them. Red MMPD, bullish body close. They are quite rare, but I think you understand what I mean. Red MMPD, bullish body close. Red MMPD, bullish body close. Red MMPD, bullish body close. Not bullish body close. Not. Red MMPD, bullish. No. MPD bullish body close. Wait a minute, MPD bullish body close. Wait a minute, MPD bullish body close. I can't really find them. Oh, we have one here, guys. Oh, you see, that's the power of not giving up. You see, you have what do you have here? You have a bearish body close, which means bearish body close with MMPD. Market is in your favor. And immediately, you see here, this means bullish body close. With MMPD with a bullish body close. What do? You do not enter this trade until you confirm. Okay? I'm sorry. Let me show the chart. Thank you, Pradeep. We can't see. Oh, hi, James. James, I need to send you the link. I forgot. Will you do it live or sometimes? Yeah, if I have the opportunity, yeah, for sure. Why not? So here you have a red MMPD, okay, with a bullish body close. So the indicator will tell you this is a bearish trap. Okay, this is a bearish trap. Let me see. It will tell you this is a bullish trap. So you don't do anything. You wait. And if you're in a trade, get out. You wait. You wait for the market to confirm. And then you have and then what do you see after that? Bearish body close. It confirmed this was a trap. For example, a lot of people will see this bullish body close. They say, okay, maybe the market might keep pushing inside of the pricing up, pushing up. And then what the market do? Boom, the market push down. And mostly you'll be like, okay, this is a, what do they call this candle? Morning star, whatsoever, I don't remember. And then you need the confirmation. And then what the market did? Boom, pushing down. So it was a trap, making a lot of people going high here. You see this candle open and then start pushing up, giving people hope. And then you see how strong this candle here is, a bullish trap, push down. But this candle cannot keep on going. And then you have another bullish candle. This is a weak bearish, very weak bearish candle. And then here you have a pink candle with a bullish body close. Do you understand the bullish and bearish trap? The bullish trap. Bullish trap happened in a red candle. Okay? So now let's go back to the pink candles. Pink MMPD candle. A pink candle is it's a bearish retracement. Pink candle is bearish retracement. Whenever you see a pink candle, it means bearish retracement. Pink candle, bearish retracement. If a pink candle is bearish body close, it means the bear market will continue. Okay? The bear market will continue. Sometimes you might see a pink candle. For example, here, you have a pink candle here, but this is a different scenario that I need to explain here. But how can I see a pink candle that is and keep on bearish? Pink candle. Oh, maybe here. 1, 2, 3, 4. There's no candle. Pink candle, bearish body close. Anyway, if you have a pink candle, and then this pink candle is not bullish, it's not bearish, or it's not any other candle, if this pink candle is not bullish and it's not the other type of candle, if it's a bearish candle, it means that the bear are quite strong. They want to continue the market in the advantage. Okay? I don't really see one. A pink candle. This is not a bearish body close. Good example of pink candle. But NQ has a pink candles on 5 minutes right now. Pink candle on 5 minutes. Is it the bearish body close? Pink candle. Is it the bearish body close? Is it the bearish body close? No, it's not pink candle. Yeah. If it's a pink candle, if it's a bearish body close. Yeah. Okay. Anyway, so if you have a pink candle on the MMPD and a bearish body close, this means the bear market is continuing. It's in your favor. If you have a bullish body close, when you see a bullish body close, a pink candle, that is bullish body close. For example, here, pink candle, bullish body close, potential reversal. Pink candle, bullish body close, potential reversal, which means, here, let me show you. Pink candle here. Let me put this demonstration. Okay, pink candle here, bullish body close. It means this market is no longer bearish. You should get out immediately or put your stop loss on top of you or get out. Don't take any chance. When you see this pink candle, if it's this pink candle is a PO4, get out. Don't think about it. Get out as soon as possible. Pink candle cannot be bullish body close. It's a bullish body close. If it's a PO4, do not think the market is not in favor. What do you see next? Boom, 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 boom. I tested this over and over again every single time. Most of the time, I'm like, okay, let me see. Boom, market always keep pushing the other direction. Pink candle cannot be bullish body close. If a pink candle is bullish body close, it means you are facing a potential reversal. It's a potential reversal. But this potential reversal needs to be confirmed. Confirmed by what? By a bullish body close. What do we have here again? After this pink candle, we are waiting for the confirmation. We have the confirmation in another pink candle. Here, bullish body close. Or if it's a green candle, it's fully confirmed that we highly keep pushing higher. See, green candle, bullish body close after a pink candle. This is your main confirmation candle that we highly likely keep pushing higher. The market not only confirm here, and the market confirm here as well in this second pink candle with bullish body close. It means we highly likely keep pushing higher. You see, the market came where? Exactly to this level here. What do you see? React. You see the reaction? But we don't know if this candle will be bullish body close. But what do we see here? We see the market is reacting from this level. When this candle close, will it be pink candle? Will it be a bullish body close? If it's a bullish body close, it means what? We are facing a bullish reversal because now we entered a bearish market here. So the MMPD will help you to see the market in a kind of like, how can I say that? Like detail. I mean, like when you go deep down in the cells, like you have a cells and you go to the nucleus, okay? To the nucleus, which is like small, deep inside of the market. It will help you understand, it will help you comprehend the market in the most detailed way, okay? So you see, the market is reacting to what? To the confirmation of the bullish. Okay, this pink candle told us we are looking to go higher, but we need confirmation. This candle, another pink candle, confirm, and this candle final confirmation is when you see the green candle with a bullish body close. This is our final confirmation that price higher, like I keep pushing higher. Boom! This is your final confirmation. Confirmation. What did price did? Price came down here. They push price up. Okay, and then price reversed from this external block here, push down, and then when price came back here, what do you see? Another reaction. And then do we have a bullish body close here? You don't know yet. Okay, so when you see a pink candle bullish body close, it's a potential reversal that needs to be confirmed by what? With another bullish body close with what? With a green, any other bullish body close, but the best one you can be waiting for is a green candle with bullish body close. Second thing, entry line, like I'm saying, the entry line, do not rely on the entry lines. The entry lines, this version is a beta version. You need to do your analysis by yourself because if the entry line are showing, which means your it means your what is called your risk is very low. If it's $50, if it doesn't see, if it when it make the calculation between the stop loss and the entry, if it's $50, it cannot say, okay, you cannot risk $50 for one lot. You know what I mean? Or $20 if you're on NQ. But if you're maybe if you're MNQ, you have $50, it might show up. You know what I mean? But if your risk is very low, it will not show anything because there's no way it can give you the entry line with an amount that doesn't that can't fit on NQ, which means you need to put it 1,500. Otherwise, you go NNQ MES, and then with a low risk, you might give you the entry. But if the risk is too if the stop loss is the normal stop loss is bigger than your risk, it will never give you an entry. Okay. So that's why sometimes you might see it doesn't give you entry because your risk is very small, okay? And your risk is small compared to the stop loss. So there's no way it can fit in, okay? That's why. And then if you have a pink candle to be considered as a retracement, it cannot be a pink candle to be considered as a retracement. It cannot be. It shouldn't be neither bullish or bearish. This is what your normal retracement needs to look like. Okay, a pink candle is a retracement candle when it is neither bullish close or bearish body close. Okay, it will be considered as a bearish retracement. And then when you after the retracement, when do you know the retracement is over? When you have a red MPD candle plus a bearish body close, it means the bearish trend resumes, which means like the retracement is over. We are looking to push, to keep pushing down. Okay, so this way we'll have bearish resumption. Okay, for example, here you see this pink candle here. You see this pink candle is a bearish retracement, pushing up, pushing up, pushing up. What do you have next here? Boom. This is a what? A bearish candle. Red bearish. Oh, let me show you. Here you have what? Pink candle, pink candle, pink candle. Even here, this is a potential bullish reversal. Okay. However, we haven't confirmed the potential bullish reversal, but not confirmed yet. It couldn't confirm it. We still pink, and then we have a bearish body close. It confirmed this wasn't a reversal, it was a retracement. Okay, are you with me? We have pink candle. It's considered, there's this pink candle. Okay, they are considered as bearish retracement. And then but we have a bullish body close. Okay, bullish body close, potential reversal. We have another bullish body close which gives you, okay, we have another potential bearish reversal, bullish reversal. But what's really confirmed the bullish reversal is this candle here, a green candle. But do we have a green candle on the MMPD, a green candle on the chart? No. So the bullish reversal has not been confirmed yet because we have no green candle with bullish. We have no green candle on the chart, no green candle of the MMPD. So the bullish, this still being considered as potential bullish reversal. The same as here, potential bullish reversal, potential bullish reversal. Here we confirm the bullish reversal. This is why we're confirming a green candle on the chart, a green candle on the MMPD. But here we never had the green candle on the MMPD, and we have an MC2, and then we have a PO4. We have a bearish PO4 with what? With red candle. This is the moment. This is considered as a bearish resumption. Okay, bearish resumption. So which means we had a bearish retracement, and then this candle confirmed the bearish retracement is over. As long as you see this MC2, it means that the strength of the bulls are not here to push this price higher. We have an MC2, and then we have a bearish PO4, and then red candle, which means this price highly likely pushing lower. And then here again, you have what? A bullish MC2. And then we have a red candle bullish MC2. And then it telling us this price highly likely not pushing down. And then what confirmed this price not pushing down? This candle here, bearish candle, pink candle with bullish body close. Okay? I hope you understand the bearish, the pink candles and the red MMPD candles. Do you have any question for the bear MMPD? Do you have any questions? Now it's time for you to ask every single question do you have. Do you have questions? Do you have questions for the bear MMPD? Questions? Do you have questions, guys? Sounds good. Okay. Any more? Anyone with questions? Anyone? No questions? Any questions? Questions? I think you got it. Excellent. But remember, even if you feel you got it, you need to do what? You need to go. I will be sending you this diagram. Okay, good. So you need to go into the diagram so you can you go in the chart. We test. I'm telling you, what I've done with the MMPD, it's highs opening. Okay, back test, sturdy back test. Understand what I'm saying? Okay. So let me just go it on the bullish MMPD. Okay, so here we have our bullish MMPD. As you can see, if we have any green candle on the MPD needs to be bullish body close. And bullish body close means strong bull market. Non-bullish body close means weak bull market. If you have a green MMPD with bearish body close, it means you have a potential, because green candle, immediate green candle plus immediate bearish body close, it means we are seeing a potential bearish trap. How will confirm the bearish trap? If the market make another bullish body close, we confirm it was a trap. If the is trap confirmed, you wait for the next candle, a bullish body close, it was a trap. If you have a bearish, if you have another bearish, if you have bearish body close, it means it wasn't a trap, it was a bearish. The bearish were very aggressive, they took over the bullish trend. Okay. A green pale MMPD, since I gave you the example of the bulls, so the bear, so you will understand the bulls is pretty much the same thing, just the opposite. Green pale MMPD plus bullish body close is made continuation of the bullish market. Okay, bearish body, green pale MMPD with bear. It's no worry, helicopter. So I will finish the live. I will be explaining everything. I'll be explaining the lines. Please come back and watch from where you left to really understand the lines I put on the MMPD. They will help you to take the best trade ever. They will tell you when to wait, how to wait to take your best trade. Okay, bearish body close, potential bullish reversal. You wait for another a confirmation. You wait for a bullish body close to confirm the bullish reversal. A green pale MMPD candle, it's neither bullish or neither bearish. It means when you see a pale green MMPD, it means we are facing what? A retracement. When it's not bullish body close or bearish body close, it's a bullish retracement. How do you know the retracement is over? You need confirmation. Confirmation is what? A green MMPD plus a bullish body close on the chart, which means the retracement is over. But if you have a bearish body close, it means a potential reversal. Okay, good. I think that's all. Now let's go back to the chart. Okay, now I'm going to explain the lines. Okay, the lines is what Pradi wants to see. What, Pradi? Okay, now we are going on the lines. Okay, So I'm going to show you the lines. First, you get I'm going to show you the Supermax trend. Okay. The Supermax trend is what exactly? Is, for example, you see the market is pushing up. For example, you see the market is transitioning from bullish to bearish. You will see the market start giving you these what is this color again? This orange line. When you see this orange line start switching on the bearish candle, it means this market is bearish. This market is bearish, but it might be a bullish retracement. But how you know it will be a bullish retracement? With this candle, with this line. This line is the momentum bias line. Yeah, I think my brain is, I've been talking for like 2 hours now. My brain is like 2 hours, 20 minutes. My brain is somewhere else. Let me drink a bit of coffee. Mm. Drink a bit of water, refreshing myself. And I just came from the running. Okay, so this line is the momentum bias line. The momentum bias line will tell you if the market is bullish or bearish. This momentum line, if the momentum line, once the momentum line, this line, okay, let me just take the candles out. Now let's forget about the candles, okay? We will be focused on the momentum line for now. Let's focus on the momentum line. The momentum line, once it's crossed above the 50 lines, the momentum lines or volatility lines, it means that, it means it is a buyer's market. And if you put the table, show table, show MACD candle bias, show MACD bias, show volume strength, value, signal consensus. Okay. Okay, yeah. Okay, here you will see the momentum line. You see, the momentum line bias is the line that will be focused to, for example, if you're on the chart, you only be looking for long when the momentum bias is long. You need to focus on one time frame. If you're taking trading in 1 minute, focus on the 1 minute. 5 minutes, after you get used to it, you can mix up. But when you see the momentum line is above the 50 line, it means it's bullish. You see, it's on now. It's telling you it's on 83. Okay, it's above 80, the 80 lines, and it's bullish. So the momentum line, you see, you have a bullish momentum. Now, bullish momentum is over here. Until here, you have a bullish pullback. Okay, let me just bring this back so I can just show you very easily. Let me just, you see here, you have a bullish momentum. See, momentum line, bullish momentum. And if we were to put the super max trend, it will be bullish as well. You see, bullish momentum, very strong bullish on the super max trend. Okay, and then so bullish momentum. To take a trade now, your best trade will be when what? When the Supermax trend came back into discount. Remember, you do not buy when price is in premium, which means price is super expensive. Okay, so now inside of the momentum line bias, the momentum line bias is the one that will be guiding you. Okay, so you see we have a bullish pullback, which means as long as the momentum line is above the 15 line, you are bullish. Because what pushed the market? Momentum. What pushed the market? Volatility. This, you need to know where is the volatility, you need to know where is the momentum, you need to know where is the buyer wants to push price. So this momentum line bias of the MMPD will help you with that. It's not something random, it's something well calculated. Thank you very much, Helicopter Tech. Okay, so it will be telling you, okay, it will be telling you exactly where is your momentum, where is the market strength, who is pushing the market, is it the bear or the bulls. Okay, you see the momentum line is above the 50 line. Okay, so what you'll do, let me take the box out. Okay, what you will do, okay, let me take these lines out so I can show you very well. And then labels and lines. Okay, I'll just leave the PO4 candles. And then once the momentum line crush, you'll say, okay, the momentum line push up. Where did I have my market swing to change? Where does the market swing to change happen? Okay, it started from here. We have bearish here. We cross from here. What was my latest market swing to change? So you locate your MMA external block. Boom, this was your MMA external block. Yeah, I think it was down here. I mean, this one was a bullish body close, but we don't really have a PO4 here. But normally, since this created market swing to change here and it's quite strong, so you'll have your external block here, but we don't have a PO4 on it. Yeah, but this is the origin of what? Of the MMPD, of the momentum line crossing the 50 line. Okay, so this will be your external block CDL in a certain way. But your original external block CDL will be here. Okay, when the market cross here and then it cross this here. So bullish body close, external block here. Oh, I think it's down here. Indeed. Oh yeah, you have a market swing to change here. Exactly here. With body close. Okay. This is your external block with the PO4. So this is your strongest area here. PO4, external block. Okay, market swing to change, external block. Okay, the market swing to change happen here. Okay, so you wait. Where did the momentum line cross above the 15 line? From here. Where is my market swing to change? Here. Okay, and then what do you see now? Market is pushing up, but you do not enter. You wait for the market to do what? To come back into discount. So what you will see now, you will see the super max trend will come back into discount. You're waiting. Jesus. Let's go back. Okay. So I wanted to press this button. Okay. So now what you're waiting, you want the super max trend to do what? To go back to discount. You don't take any trade like I show you. Okay. Now we are into what? Into discount. Now you're into discount, you get a PO4 bullish. And then you say, okay, now, and then you can put your, what is called? And then let's see, and I'm going to show you the candles. Show MMPD candles. You see, the MMPD candle did what? No, I'll put the MMPD candle bias. MMPD candles here. The MMPD candle did what? The MMPD candle went back into what? Into discount here. MMPD candle came back into discount. What do we have here? You have your internal block. You have your bullish internal block. Okay, you have your bullish internal block here with a PO4 that did what? It came back into discount. But look, the momentum line is still bullish. So you see, the momentum line is still bullish, and then price did what? A PO4 bullish here. Okay, so this is the moment you have your internal block here. internal block long. Okay, and then what do you see next? And then price did what? Price keep pushing up. See? See? You see? This is how you get into discount. This indicator now will tell you exactly when price is in discount. Okay? What do? You wait. Now there's no worry that, oh, we enter here because you see this. I mean, you can still enter if you want to, but you know this is not, we are not in discount. You're buying in super high price. Okay, you're buying in super high price. So, but when price came down here, it gives you a PO for bullish. And you see the MMPD. What do you see on the MMPD? Pink candle, bullish body close, potential bullish reversal. Bullish reversal, confirm, not confirmed yet. Bullish reversal is confirmed in this candle. Okay, no, this is not a green candle, not a green candle, not a green candle, not a green candle. Bullish reversal confirmed here. In this green candle, PO for bullish, PO for bullish. If you wait, you can decide to take your trade here. You take a long here. When you come here, your stop loss is here. You target 1 to 2. Okay, you target 1 to 2. You get 1 to 2 exactly in this candle. Or if you want to be sure, you say, okay, I'm going to wait for my green candle plus a bearish body, a bullish body close, a green candle that confirm that we are really reversing. And then you have it where exactly here. And then you say, okay, I'm going to take my trade here. When the price come back inside, I'm going to take my trade here. And then you have your long here. And then you say, okay, we can just enter on the close, or you wait for the market come back into the PO4. And then you see this candle is what? MC2 bullish. That's confirmed that we are pushing higher. And you put your stop loss here. And then you target 1 to 2 again. 1, 2, 3. And then you keep looking for bullish trade as long as the momentum line bias is on premium. You look for bullish trade. You don't care. You wait for the supermax trend to come back into discount, and then you wait for the best trade. That's all you do. You have your trade here. And if you were to wait here, okay, you enter here, you wait for the market to come back here, okay, you take another trade here in this level here. That's all you need to do. Target 1 to 2. Go and backtest and backtest and backtest and backtest and backtest. Okay, and then what you see next, and then price keep pushing up. Okay, so this is the news. This is the news. We have the news where you see what price did. I'm telling you, the MMM is reacting to news like a charm. Where did price came back? You see the news? The news came exactly where you entered. Even with the news, what do you see? The momentum line is still what? It's still bullish. It's still bullish. And then you see the reaction from this level. You entered, came back exactly to it. The news came back to it, and you see the reaction up again. Okay? I'm not telling you to go and trade news, but so far for now, what I'm seeing, the MMM respond very nicely even to the news. Very nicely. Okay? So what do you see now? The price is still the momentum is still bullish because this momentum line is still on premium. So you're only looking for bullish trade. Now, to take a trade, what do? You wait for price to go down to discount. You don't care. As long as price is above here, you look for long. Anytime price came back into discount, what do? You look for a trade. That's all you need to do. Discount, you look for a trade. Discount, you look for PO for bullish. If you confirm with the candles, boom. For example, here you see the supermax trend is you have a weak bullish fading. So bullish is fading, and then since the momentum line will be if it's purple, it means that you have a pullback. But once it goes below this line, it means you're no longer bearish. you are bullish, and then you need confirmation. Okay. But so far, we're still in a bullish trend. It doesn't matter. That's why you see yesterday, I was taking this entire week, I've been like showing you the power of the MMM, because I've used all of these little things to take trades. I'm entering my trades like with a lot of lots, 15 lots, 14 lots, 8 lots. I don't care, because I know exactly where to enter, exactly what I'm looking for, because my momentum is bullish. What I'm looking for the price to come into discount. Boom, what price did? So price, you see, if I enter here, I'm not even in drawdown. I enter here again, even price came here, I'm not in drawdown. So that's why when the market gives me bullish bullish, I just move my stop loss. I don't care. So now we're still in a bullish pullback. Okay, but however, you can say, okay, if in my bullish pullback, I can look for a short, because I'm in a bullish pullback. But remember, your momentum is bearish, your momentum is bullish. You are just taking an opposite side trade in a bullish momentum. Okay, and then you can just use the MMPD, for example. Here, you can use the MMPD candle knowledge to take a short. For example, you say, okay, price is pushing up. We are in super high premium. So we expect price to reverse, and then when you arrive here, you see price cannot push up, and then you have an MC2. MC2 is telling you price highly likely do what? Highly likely push down. Okay, and then you have a green candle. Green candle means bullish retracement. When you have this PO for bullish and then bullish candle, it means that this is a potential reversal. To confirm the potential reversal, what do you wait? You wait for what? Another bearish body close. And then you have a PO for bearish plus a red candle. This confirm the reversal you saw here. Okay, even you see this potential bullish reversal, it couldn't continue. You have an MC2. The MC2 is telling you this price is no longer going higher. And then the potential bullish continuity wasn't confirmed by a green bullish body close. And then what do you have next? And then you have a PO for bearish. This confirmed price will keep pushing lower. And then this is where we enter here. Confirmation, boom, stop loss here. And then you target what? This liquidity down here. Okay. And then price did what? Price came down here nicely. And then you just enter. When you enter, you just, I mean, if it's news, you wouldn't even trade. But so far, this market is in a bullish pullback. A bullish pullback means, you see, it's purple. We're still bullish, but it's purple. It means that it's a bullish pullback, which means you're taking a scratch trade against the main trend in 1 minute. Which, remember, we are in 1 minute. We focus on what in the momentum line in 1 minute. And the Supermax trend is a weak bearish. It's telling you we are in a weak bearish market, because we are in a bullish pullback. It's a weak bearish market. It's not that strong, so be careful. If the market gives you something, you just protect it. You know, for example, me, I will be going in lower time frame. I don't care. For example, here I have this pink candle. I know that what I'm doing is I'm going against the trend. Market give me this bullish body close, bearish body close, bearish body close. My stop loss on top of every single bearish body close, because I know I'm trading against the trend. And then what I do, I'm protecting my profit, because I'm trading against the trend. And markets give me this pink candle here, which is a bearish retracement. What I do, I'm out immediately. If I didn't put my stop loss here, market give me this, bye-bye, I'm out of the market. I don't care. I don't know. Even the market were to go all the way down, the market will not find me. I'm in a bearish retracement now. I'm not letting this market retracing with my profit. My profit is mine. What the market gives me is mine. I'm not letting it go. You can always enter again, but I'm not letting, for example, if I entered this market from here, and then I'm taking, let's say from here I make $1,000, and I'm letting the market retracing $500 against me. No way. This market is, I'm just here to make money. I'm just here to take advantage of what I'm seeing. I'm not here to be right. I'm here to protect my account. I'm not letting anything retrace with me. I don't know if this retracement will be a reversal, or if this retracement, where this reversal will be when will be the end of this reversal? I don't know if it's this retracement will be a deep retracement or low retracement. Of this retracement will be a complete continuity or resumption. I don't know. So I'm protecting the profit I make. I don't care. This is the way you should see. And if the MMPD, if the MMM system, if the MMM can give you this kind of insight of the market, there's no need for you to stay in a trade waiting for retracement. Get out, get in again. If the market is in your advantage, for example, if this was a bearish retracement, what you'll see here, retracement here, the market wouldn't give you a bullish body close, a PO4 bullish with a pink candle. It's a potential reversal. Isn't it confirmed? It confirmed it in this candle. And then pink candle again, bullish body close. Green candle, bullish body close. It's confirmed this is a bullish reversal. Okay? A bullish reversal. We are no longer bearish. You know what I mean? So this is the way you frame the market. You go in your 1 minute, you go in the 30 second, 15 second. You do not let the market retrace you here. You do not let retracement. You do, for example, if I entered here, and then I'll be like, Jesus Christ, I made $1,000. I didn't take profit. And then because of what? Because you don't understand what the market is doing. So the MMM will tell you exactly what the market is doing, what you need to do in order to conserve your profits, in order to avoid the market going against you. Because the 5 minute was telling you, you are what? You have a bullish momentum. You have a bullish momentum. You see on 5 minutes, you have a bullish body close with what? A pink candle. So now you just need a green candle to do what? To confirm the reversal. Because we were bearish. Now you need a green candle to confirm the reversal. If you want, you can enter here, but you know you're still looking for your confirmation of the bullishness. You don't have it yet. But you can decide to enter. It's up to you. But I'm just giving you high precision. High precision. You can wait for the confirmation or you can just wait, enter. But if you're in a bearish trade, you get out immediately. What you see in lower time frame, and mostly if you see the market took this low here, boom. Where the market is turning off, exactly where you had what? You had your MC2, because this MC2, we have a strong bearish going down, strong bearish volume, MC2 come in. Where the market came exactly to the same level as the MC2. And what is the MC2? This MC2 is what? It's an MMM block. Okay? This is an MMM block. MMM CDL. See? Market came exactly to it, even if it's news. The market pushed to it, respected it, pushed up. See? The MMM, if you give me 1 second, guys. I gotta get some delivery, guys. So this is that. You just mastered the system. You master the system, you understand it, and then you see very clearly. You combine everything together, you back test it. If you can master the system, you master the candles, you master the MMPD, you master the PO4, you don't need anything else. And I'm going to show you another way again. If you don't want to use the momentum line bias, I will give you something else to frame your trend based on the volatility. Where is your volatility? If volatility is your friend, if there's no volatility, there's no market, there's no trade. You know what I mean? And you have your MMM here, boom. And then as you can see again, we have background. You have the momentum background. Now you can see the background. Okay, you see bearish background, bullish background, bearish background. But you don't really need to focus on the background or take trade based on the background. They are just like helper to confirm what you're saying. You know what I mean? To confirm that the market is in your advantage. Until here, it's not in your advantage anymore. It just helps you to frame the market. Okay, so now the market came exactly to what? To this MC2, and you see the reaction from the MC2. The market is having difficulty to push up, but let's see how the candle will close. Okay, but our momentum line bias is still what? Still bullish. Okay, still bullish. And then, but we don't have bullish confirmation yet that is telling us we are pushing higher. Okay. And then since the market making market swing to change here, we need to see another market swing to change bullish in order to really say, okay, we are going higher. Okay. There's no market swing to change. And if you're in the 5 minutes, focus on the 5 minutes. But you can use in higher time frame, and when you go down in lower time frame, you frame it. You can use the gap, okay, to see the reaction and confirm. You can use the unfair pricing gap on higher time frame. You can the on-field portion gap. You can use everything where you expect the market session high, session low, daily high, daily low, H4 high, H4 low. You can use them to frame your trade to say, okay, I'm bullish, I'm bearish. I mean, I explained you already how to make your analysis. I have so many videos on YouTube. You just go and check them out. But this is just a high level of precision. Okay, high level of precision. So this is the moment when you see an MM external block. This is where you wait the market. You wait for the supermax trend with the candles to go into this count. Okay, not here. At least touching the 20 line. At least touching the 80 lines. Okay, and then here, what you'll see next, and then you'll see on the table show MMPD candle bias. So I put this to tell you exactly what you're looking at. You see, potential bullish reversal, because what? Because we have a pink candle. This is exactly what I was showing on the flow chart, on the diagram. It's telling you we have a pink candle plus pink candle with a potential bullish reversal. Remember, this only focus on what? It only focus on the last candle close. So it doesn't see this candle at all. So that's why you need to wait for what? For confirmation. Okay. That's why you need to wait for the market to create what? Market swing to change. Since we have here, we have an MMM external block here. You have your MMM external block here. And then the market react to what? Exactly to the MC2, because these MC2 have a lot of volume. You see the market arrive here, as I was saying, the market is having difficulty, even in close bullish body close. That's why you need to wait for the confirmation. That's why you need to make your analysis in higher time frame. Let's see the 1 hour. The 1 hour is what? You see, the 1 hour is a strong bullish candle. We have a bearish pullback. This is just a bearish pullback in the 1 hour. See, you have your momentum line bias on the 1 hour in what? In this in bearish, which means the market is bearish. Okay. So you always wait for when this candle close, it will tell you something else. Until the candle close, you don't take any decision. Until you have confirmation, you don't take any trade. Okay. For example, if you were framing this market here, you already take profit from here. Okay. Or if you want, you can just, for example, this will have been your MMM external block, since we are in this will have, for example, your entry. If you were to take a trade here, for example, if you had an external block here, external block CDS here, and then you will have an your internal block will be here, internal block short here. I mean, I don't really trade with news, but it is your internal block short here. And then what do you see? The market came exactly to this level here, didn't violate the midline, and then pushed down. Okay, because what? Because we have an MMM internal block here at this level. But pink candle, market did just confirm the bullishness. We never had a green candle with on the MMPD, a green with a bullish body close that confirmed that we are going higher. And that's what your trade needs to be based on, the daily, 4 hour and 1 hour. And then you use 15 minutes, 5 minutes to frame your trade, to say, okay, this is the structure we have. The market created market structure change, and I'm looking for a bearish trade. Okay, this is where I enter. Okay, you target your 1 to 2, you're done. For example, here you'll have the targeted your 1 to 2. Me, I will have get out, because normally I jump to the 1 minute, because I'm like, I don't want to give anything to the market. So let's see, I will have made okay, 1 to 181. Okay, 1 to 181. The market came back here again. Yeah, but still. So probably I will have get out exactly here. I will have put my stop loss on top of here. I will have make 1 to 1.26. It's better than me letting the market come back here with me. No way. It would never happen. Okay, so my stop loss will be here, stop loss here, stop loss here. Every bearish body close, my stop loss move. I don't care. Okay. Mostly if I'm coming inside on a fair pricing gap, or I would have put my stop loss here just to take the low of this candle. Right? And then you see the market just react exactly to what? To our external block. Again, it come back, we touch our internal block, push down. Okay. So now we confirm this is a strong bearish candle. Okay. This is now we confirm that this price highly likely push down. Okay. And then now we see the momentum line is pushy. So you can have limit order, it's up to you. Me, what I do, sometimes I just enter, I like limit order a lot. Okay, or sometimes I just enter at the close of the candle. I know it's a risk because sometimes I don't want, if the trend is very strong, it might go without you. But if the trend can retrace back middle of the candle, yeah, you can put a stop order. This is what I say: go back test, back test, work on your execution. Because when you have all this knowledge, you have a strategy. It's not only about the strategy itself; it's about you, your personality. Remember, you're not only trading a strategy; you're trading yourself as well. That's why it is very important to, when you have knowledge, you test and back test the knowledge to see what's best for you. Okay, to see what is best for you. Okay, back test and see what is best for you. Go and back test again and again and check what is working for you. If putting the order, stop loss order, is what's works best for you, boom. If putting a limit order in the middle of the candle what works best for you, okay. For example, me, I discovered that I don't want the trade to go against me. I just put once the candle close, I enter. If I have confirmation, I enter. If my bias was already bullish or bearish, I just enter. Okay. For example, if you do the analysis in higher time frame, you would have entered this trade from here. You get out, and then probably you say, okay, if the market were to go down, for example, if you go in 1 minute and then you drop in the 1 minute, you look, okay, and then see here in the 1 minute, you have a confirmation here. You have rejection from this level here, MC2, bearish body close, you are in premium, and then you have this green, pale green with a bearish body close. It's telling you that price is no longer wants to go up. You put your stop loss up, you get enter again. Boom. Because you can go layer on the layer. That's why you see yesterday I was entering, getting out, entering, getting out, and entering again when I have my confirmation. Because I'm not letting price retrace with me. I prefer to go back and wait for a reaction, wait for confirmation, and get in. Okay. That's why when you see pale green candle with bearish body close, it's a potential reversal. These confirm the reversal. This candle confirms the reversal. But see, we cannot have bearish body close yet. And then if the market were to give you a pink candle with a bullish body close, immediately you get out. Here, pink candle with bullish body close, bye-bye. You are not in this market anymore. It's not yours. Okay? So, and what's next? And then as you can see, so you will have your MMPD candle buys. We will tell you exactly. So you see all this candle, they are weak bearish candle because none of them are bullish body close, none of them are bearish body close. It means we have weak bearish candle. It means that we have a bearish retracement. No, this is a bearish retracement candle. So if this candle can close bearish body close, it will be the continuity of the bearish trend. If it not, that's okay. So once it closes, you will. If it closes bearish body close, you will see bearish trade resuming. If it's not, it will just say weak bearish candle. Let's say 5, 3, 2, 1, boom. Weak bearish candle again. If this candle were to close bearish body close, it will like bearish resuming, bearish continuation. But if not, it will tell you exactly the MMPD candle. Okay, show MMPD bias. They show MMPD bias. It will show you the overall trend. The overall trend. What are we looking for? It will take into account the volumes of the candles, the candles itself. It's a package inside of the MMPD bias. Will tell you what's happening in the MMPD. Okay, it's telling you it's a strong bearish trend. You see, all of them are what? Red, 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 red. Show volume strength. What is volume strength do you have? You have a low volume strength. Why it's low? You see, it's being confirmed by this candle are closing inside of each other. The strength of the bearish trend is not that strong. And you see, you have a strong bearish, and you see it's a light orange candle. Okay, now we have a strong bearish candle now, which means bearish trend is continuing. Okay, so, and then you want to see this candle keep pushing down. Okay, when you have a pink candle, which is a bearish retracement, and immediately you have a bearish body close candle with a red, it means the stop loss should be immediately on top of it, which means the market shouldn't come back to this level here at all. Okay, I don't negotiate that. If we have pink candle, immediately after the pink candle, we have a bearish body close with red, it means if you come across instances where the MMPD is in discount, we enter on PO4, and then we have shop in the market, or to trade in shop market. When is it shopping or profit loss in what we make? Yeah, for example, yesterday I took a long, if you were on the Discord, I took a long trade after a trend resumption, and the market was like shopping. He came very close to my stop loss, and he pushed up. And I'm like, oh, I don't want to stay in this trade. I get out, and then I get out of the trade, the market just pushed up. I'm like, what the hell? I'm like, geez, I'm not trading it. I'm done. I was like so mad. And it was shopping. I don't like shopping. If you are in the shopping market, get out, move your stop loss into profit. Don't give the market what you make. Because with the MMM, once you enter a trade, you should be in profit. Because I develop the MMM to, once you enter, you need to be in profit immediately. Yeah. So shopping market, I avoid them. You see, this is a shopping market. Boom, 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 boom. Here, I will have get out from here. Boom. Oh, once I see this first candle here, you see this candle? I will put my stop loss here. Immediately here. Because this is MC2, it means we are pushing down. And then, if we cannot push down, my stop loss will be on top of here. And then, when he give me this bearish body close, is telling me that, okay, we're getting outside of the retracement. This is a bearish body close that confirm we're getting out. My stop loss will be here. And the market put me out, bye-bye. I'm done. So shopping market, no way. Because the MMM is designed for, if you can wait for the perfect setup, when you enter, you shouldn't be in the shopping market. And if you are shopping market, shopping market will be mostly in premium and in discount. So if you're taking a long in premium, you might have a shopping market, a lot of consolidation. That's why it's better you take a trade on discount for long and premium for short. For example, here, if I'm already on the short, I don't enter. That's why the AI Pro will tell you. See, for example, here, it will tell you this: you're in a neutral zone. Wait for a clear direction. Do not enter. Do not take any trade. For example, if we were to go a couple of bars back, let's see. You have a super light bearish, neutral zone. Immediately sell in the neutral zone. Wait for a clear direction. Take it easy. Do not trade. Take it easy. Do not trade. Okay. For example, here I will say it's telling you it's telling you here. Okay. Boom. Here on this trend, it says strong bearish. Cool. Reduce your position from 50 to 75%. See? Immediately, it's telling you that the MMM AI pool. It's like this like a kind of information of the entire MMM system. Okay, it's telling you momentum strength, strong bearish in cold. Yeah, but reduce your position size from 50 to 75%. And you see how pale this very pale, all of this is very pale, and the volume is very low. And then if you check bearish body close, red MMPD plus pink, no. We shouldn't get into a zooming trend to a pink candle with a bullish body close. It's out immediately. You're in a trade. Bye. Okay. So where okay, and then you will have what again? Show MMPD value. Show MMPD value. Show signal consensus. Show signal divergence. Okay. Show MMPD value. Where is the show MMPD value? I didn't toggle it in. MMPD value. Huh? Oh, maybe it's down here. What? Oh, okay. Show MMPD state. It should be show MMPD state. I need to correct it as well on the code. I'll do it later and update it. Show MMPD state. Show MMPD state will tell you exactly where price is. Price is in strong discount. Strong discount, it means oh, let me bring it back. Okay, show MMPD. See, as I was telling you earlier, when you see prices crossing this level, make sure that you start thinking of getting out of the trade, because when you see price in this box, discount box, it's not your friend anymore. You see, MMPD state, strong discount, it's in green, but with what? Price market is going down. Direction is down, but we are in green, which means you need to be looking this market, even if it's bearish. Okay, if it's even bearish, but you should be preparing embrace yourself to get out, because this is not in your advantage. We are in discount. The market highly likely pushing up. You see this green? It's green. Super max trend is start getting from red to what? To orange. Volume strength low. Consensus. The consensus is like it's telling you the overall. It's making a calculation of the entire table, and it's telling you we have a strong sell overall, but that doesn't mean you need to enter. It's telling you like a consensus. It means like all these indicators overall when you check all of them, if you compare the buying and selling pressure, okay, we are more facing a selling pressure, because there's a strong bearish candle, bearish, strong discount, and then you see the arrows down, strong bearish trend. So we have a strong sell. That doesn't mean you need to enter, because you were what strong discount in green. Okay, and then what's next? And you see moderate sell. Now it's selling on consensus. Be careful, moderate sell, because we have potential bullish reversal, bearish pullback. Now you see the momentum line is bearish now. Okay, strong bearish, improving. The supermax trend is in strong bearish, but we are pushing up. And then bearish trend, and you see more, and then now you have a divergence. The divergence is telling you we have a bearish, and the MMPD is bearish. However, okay, MMPD bearish. However, you see how pale it is. It's very pale. We have a very pale bearish, but with volume going down, very pale bearish. It's a weak bearish as well, a bearish pullback, but we have a weak bullish candle. That means we're still bearish, but we're not that strong to take a trade. And you see we have a divergence, which means the entire market is bearish, but you have a bullishness in the bearish market. And then which means you see the arrow is just be careful. We are not bearish, really bearish. We are in a bullish momentum for like for a moment now. Just be careful. Okay, and you see the market keep going. And then this is it. And then now you have a consensus strong boy. pressure bullish low, strong bullish trend, moderate premium, which means like a moderate premium, which means you can still buy, moderate bullish, which means like we're not that strong bullish. Remember the consensus, even if it's strong boy, it's just telling you the overall what it's seeing. It's not something that you will take trade based on it. Okay, it's just telling you this overall information you hear. It just translated for you. It means just this table is just an helper. What you need to really use in this table is the MMPD, the momentum line bias, and then the supermax trend, and then the MMPD state. That's all you need. Okay, the MMPD bias, the strong bullish trend, is just like overall information. Okay, low volume strength, it's mean like volume, you do not really have a lot of volume in this market. Okay, and then the divergence will only appear when we have divergence. Okay, and we check on the 5 minutes. What do we see? Highly likely we're still in a bullish market. Okay, now we are in a potential bullish reversal candle. We have a bearish pullback here. Okay, because the momentum line bias cross from bullish to bearish now. Now we are looking at a bearish market. So highly likely we might see this price, it fill out this unfair pricing guy, and we might even see this candle just push down or close below here. Okay, so you just be careful. You see, moderate sell, bearish trend, mild discount, weak bearish improving. We have a bullish pullback. We have a mix filling. So it's not the best area to start taking trade. You just wait because you basically have nothing. And if you are taking trade, you'll be looking for more bearish trade than bullish trade. So let's check our daily. What was the daily bias? I haven't done any analysis for today. I don't even know what is going on. Oh, it closed inside. It closed inside with bearish or bullish affinity. Yeah, the closing side of pretty much a bullish affinity or bearish affinity. I don't know. Anyway, but anyway, you can see this. We have a weak bearish candle, which means we have a weak bearish candle. The previous day candle was a weak bearish candle. Okay, we just need to be careful. But we're still bearish. Maybe this market might come to take this liquidity on top of this candle, or might want to come inside of this unfair pricing gap here. We don't know. Okay, but so far we have a weak bearish candle on the based on the MMPD candle bias. Our momentum is still bearish. Our momentum is bearish on the daily. So make sure that momentum line bias, which is the main boy, it's bearish. So you focus on taking a bearish trade. So best way to take a nice bearish trade, wait for the market to take some liquidity on top of the daily, or came inside of this unfair pricing gap, take some nice liquidity, and then you look for a nice short. Okay, this is what I will be looking for. I will be looking when the market either touch this level of liquidity or touch this unfair pricing gap on the daily, or you can even go in 4 hours to see what you're looking at. Yeah, and then maybe price might not come here, but we never know. But this is what I don't think price will come to take this high, but let's see. Anyway, and then you see price already came and took this liquidity here. Okay, let me just delete these things. Okay, so this is what you'll be looking for. Yeah, anyway, so you always go and study the MMPD, study again and again and again, master it, understanding. We watch this video, take notes. Okay, take notes. Once you understand what I explained you today, your understanding of the market will completely change, and you'll be taking decision, like a razor. You know exactly when to enter, how to enter, what to wait for to enter. For example, here, this candle we have on the 4 hour. What do you have? You have the momentum line is on a bearish trend. What do you wait? You wait for now we have a bearish pullback. Okay, you wait for a bearish pullback. You wait for the supermax trend either come back into discount into premium while the momentum line is still in bearish, and then you wait for the supermax trend with the candles to go into premium, and then you wait for your a pink candle with a pink candle with a bearish body close, or a red candle with a bearish body close, a confirmation, and this is where you enter your trade, or you wait for your internal block, external block, boom. This just giving you the best entry ever. Okay, now let's switch to the PDB. Okay, not the PDB, MVM. The MVM, it's another indicator that you can use to frame your trade. Okay, to frame your trade. Okay, let's go on the 15 minutes. If I can have a nice example on our yesterday, we had a nice example on the 15 minutes the other day. Okay, let's play back. Let's do a playback. For example, I'm going to show you something. Okay, I'm going to show you something. For example, I took a trade before yesterday. Based on what? For example, here, when you see the MVM, this MVM, this candle, this indicator called the MVM, market volatility momentum. I'm going to show it to you. It's called market volatility momentum plus trend filter pro. Market volatility momentum stands for MVM. Okay, it's pretty much the same thing, but different than the what is called than the MMPD. Let me drink some water, guys. My brain is than the MMPD, right? So you put it on your chart, market volatility momentum. Okay, you'll say, where is price? If price is on the market, this, I think I already explained this. This is the bullish volatility line. This is the bullish volatility line. You can frame your trade based on that. And this is the bearish volatility line. This is the bearish volatility line, okay? This is your bullish volatility line. This is your bearish volatility line, okay? You can frame your trade based on that. You see, okay, where is price right now? Price is below. Yeah, I'm going to finish today. I'm going to finish the entire, even if it's taking me 5 hours, I will finish every single indicator today. I'm not coming back to it. You can come back and watch it after that, but I'm going to finish the entire thing. If I don't do it today, I might not have time, okay? So this is the bearish volatility line, this is the bullish volatility line, okay? You can come back and watch it anytime. It'll be on YouTube. And then, so you will frame your trade based on the bullish volatility line and bearish volatility line. Okay, the market is what? Under the bearish volatility line. Okay, so what you wait next for the MMPD or the Supermax trend to come into premium. Since it's on the bearish volatility line, you're looking to take a short, but you don't take a short yet. Okay, and then you say, okay, where did the market create the market structure to change? So here, so where you have your PO for bearish? From here. So this is your MMM external block. You can just trace the MMM external block just based on that. Based on the last time the market crossed the 50 line, if you're using the momentum line bias, and if you're using the MVM pool, you wait where the market crossed last time here, and then you say this is my MMM external block short. Okay, and then what you do next? You wait for the MMPD to go back to what? To premium. And then let's play it out. You don't take any trade. You wait. The market is going down. You just wait. You're waiting for this market to go back to premium without violating what? Violating this high or crossing above the a bullish or bearish volatility line. And if you see price inside of the bullish and bearish volatility line, it means price is it's a choppy market, or price is consolidating. And then once you see price inside of premium here, and then you say, okay, this is the moment for me to look for a trade. And then you just wait. Now you have a nice retracement, but you don't have any confirmation yet. You don't have any confirmation. You don't have any confirmation. You don't have anything. You're just waiting. You're waiting. You wait. Now you have a potential bearish reversal here. Okay, you have a potential bearish reversal. If you want, you can enter here. But if you want, you can enter here. Or the best thing you can do. Okay, the best thing you can do. What if you entering here? You can say, okay, so this will be your internal MMM internal block. Okay, you can decide to enter here, and then here's your MMM internal block short. But you might want to wait for another bearish body close, a red candle that will confirm the market going down. Okay, and then now you have a red candle here confirming, a red candle plus bearish body close confirming the market is pushing down. Okay, but as you can see from this candle here, this is your first time this market will reverse. Okay, and then what you do, you take a short. If you want to enter on the MMA internal block, you take your short from here. Okay, you target 1 to 2. If you want extra confirmation, you say, okay, I'm waiting for a red candle. A red candle with bearish body close to confirm that we're going down. And you say, okay, I'm a confirmation guy, I want to confirm. And then you say, okay, this is my red candle, and then you enter here, and then you still put your stop loss above here. Okay, and then you target 1 to 2. Or you target this level of liquidity, or you target 1 to 2. 1 to 2. Okay, you target 1 to 2 when you enter here, and then price is pushing down, and then price is pushing up. But as you can see here, price will have taken your stop loss. But this is the moment that you need when you enter a trade. This is what I was teaching you. When you enter a trade, you don't know. You see, if you enter on the MMA internal block, but if you wait for confirmation, sometimes it's too late. But what will save you to conserve these profits is what? As you can see here, when you enter this trade here, the market gives you a red candle on the MPD with bearish body close. Second candle is okay, it's a weak bearish. Okay, let's go back. That's why me, for example, if I were to wait for the confirmation, I will be moving my stop loss. Okay, first I get this candle. Second, and then when I have this pink candle here, I have this red candle here, I'll be moving my stop loss right above this bearish body close. Bearish body close, move my stop loss. I leave it here. Against my second bearish close, my stop loss will be here. Okay? Remember, if the market is in your advantage, the market will go in your direction. Okay? And then when you see pink candle means market will retrace. What you do, you put your stop loss exactly on top of the pink candle. You don't care. Unless you say, okay, market highly likely, okay, you say, okay, my stop loss is here inside of this opening gap. And then you put your your profit exactly on the opening gap, because you know the market will have a reaction from this level. You make 1 to 1.68. Okay? But me, I move my stop loss. Whenever I see this pink candle, they mean retracement for me. I don't let the market retrace me. This is the moment you will use the MMMPD to do what? To get out with profit. Okay? So what do you see next? Because pink candle means retracement. You don't know how deep the retracement will be. You don't know if this retracement will be a bearish, it will be a reversal. What do you see next? Price give another pink candle. Price give a second pink candle. When you see pink candle plus bullish body close, you don't think. If you are still in this trade, you get out immediately. If you went trailing your stop, you get out immediately. Because your best entry is what? On the MMM internal block. What? You have a MC2 MM internal block, you enter here, you make your 1 to 2. If you were to wait for confirmation, it might be good, but it might be too late. So you need to always trail your stop. That's why I use the MMPD to get out of trade as fast as possible. I don't play around. And then again, you get out of this trade, you let the trade go up and up and up again and up. We came back to what? To premium again. So you're looking for a short again because what? Because you have what? Because you have the volatility line above, which means the volatility line price is below the bearish volatility line, which means we're still looking for short. Whenever the market price come into discount, into premium, you're looking for a short, because your external block here, you see your external block here hasn't been violated. Every time price come into premium, you take a short. Or other things you can do as well. Every time price give you pink candle, and then price give you a red candle, a bearish body close with red candle, these are not the entry. You can enter after the retracement. For example, when price is not in premium, you can enter in a retracement when the retracement is over. Okay, for example, retracement is over here. So this is the candle that resume the retracement, the resumption. Okay, you put your stop loss here, and then you target 1 to 2. So in case you are entering the continuity of this trend. Okay, and again here, price retrace here, and then price give you a bearish body close here. You have a bearish body close here in this candle, bearish body close, bearish body close. This is the moment you enter again. You can enter this short here, in and out. This is like in and out trade, in and out. Retracement, bearish body plus bearish body close, which means resumption is over. You enter in this next candle, and then you target 1 to 2, 1 to 2. Okay, you target 1 to 2. That's all. Or you keep moving your stop loss every single candle. Okay, because you remember you are buying in discount. Okay, so when price came over here again, and then you're looking for what? A PO for bearish or a bearish body close. Now you have a bearish body close, but it's not a PO for. You keep waiting. Okay, you keep waiting. This price, okay. Now you have your bearish body close here. Price rejected here. You have bearish body close plus what? Bearish body close plus a red candle. And then this is the moment you say, okay, this is your nice trade again. Because you're coming from what? From premium. Okay, from premium. But remember, this trade, you're coming from premium. We're coming from premium, but we didn't really touch premium. This is more like a reversal. Okay, so remember this trade, you might be very careful about them. Okay, but they are very, very nice as well. Okay, like I say, go and back test. You target 1 to 2. Target 1 to 2, and then you let the market keep pushing. And then when you start seeing pink candle here, you see pink candle. This candle is what? Bearish. It's a MC2. When you see this MC2, okay, plus bullish body close pink, you out. You don't think, you out immediately. Why you out? Because here you didn't enter when price touch the 80 lines. Remember, for you to take a trade, price needs to touch the 80 lines and give you these candles you're looking for. For example, here, this was a perfect trade. See, perfect trade. You are still into premium in the 80 lines, and then we get the setup. But here you didn't get the setup. So that's why you need to go and back test to see what's worked for you. So your best trade is this one when price is in premium, and then you have your PO4 bullish, your PO4 bearish, and then you have all these confluences. But if you're not in, you get out. But still, we expect a reaction from this level. Okay, but since we have a pink candle with a bullish body close, we get out from this trade immediately. Okay, and then see, exactly, we get out. And then now price touch what? 80 lines. You see, now this is your best trade. That's why you need to wait. Price touch 80 lines. This is where you think you have your best edge. Price touch 80 lines, and then you have a pale green with what? Bearish body close, PO4 bearish. This is your entry. Okay, and if price, normally I just put my stop and enter here. Okay, because we touched the 80 line. Okay, this is your best entry. You see here, we didn't touch the 80 line, but here we touched the 80 line. These have more potential of working than the other one. So I'm just showing you all this scenario, which one might work, which one might not work. Okay, and then see, do you see when price touch the 80 lines, there's more power, there's more chance of this price pushing down. You see, even price came to this level here, where price came up here, it respected the high of this candle. See, even price came up here, it still respected this level and give you your 1 to 2. Remember, if price doesn't touch, I always say that since the moment I created the MMM, you take a trade when price, a short when price is inside of discount box. You take a long when price is touch the discount. Your discount is from your discount is from the 20 to 0. Your premium is from 80 to 100. This is where you take your trades. And then what do you see next? And then price is pushing. And then another confirmation you have the MMM, the momentum line bias. Okay, the MMMPD momentum line. Okay, the momentum line is what? Is bearish as well. It's in confluence with what? With the volatility momentum, which is under. So every single trade you take a bearish trade. And if you were, and then you can say, okay, boom, 1 to 2, and then look at how the market is pushing down. Market is pushing down. You're 1 to 2. So your best trade are the one that touch the line. And then here, when you're here, look at this. And price touch what? First candle that touch the first candle that touched the line here. Okay, let's say you let the trade run. So you got this first candle that touched the 80 line here. We touch the 80 line, not the 80 line, the 20 line. We start seeing sign of reversal here. Now we have the MC2 bullish. When you see this MC2 bullish, you put your stop loss on top of it. Bye. You are not in this market anymore. And then now you see you have a bullish body close with a peg candle. Are you looking for a long? No, you don't take a long. But if you want, you could. But it's up to you. Okay. But you're looking for short. You're looking for price to come back into discount while price still under the MMM volatility line. And then price is below. You can use either the momentum line to frame your trade, or you can use the MMM volatility line to frame your trade. Okay, this line, you see, this line is the signal line. It will just tell you when the market is really in your advantage. Okay, so you just chill. Okay, if it's under it, it's okay, but it's not a big deal. Okay, but remember you can if you see price far away from it, you will come back to it. Okay, this is just a consolidation. I think, what time was it? 3 a.m., 2 a.m. This is the moment. Like, so this consolidation this was Asia. This was Asia around here, and then I think we have London here. This was London. London have a lot of volatility that came in, push. This, I like to trade this London reversal, come back to take the Asian high, and then push down. We tested and push down. This is New York open, push price down. So I like the New York Open because I know there's a lot of volatility at this time. So this is the MVM. You can use the volatility line to frame your trade, okay? And then the UPG is just your normal unfair pricing gap indicator. Yeah, your normal unfair pricing gap indicator will just plot. Let me just delete all of this. It will just plot the market for you to tell you. So this line is the kind of volume line. It's telling you where do you have the most volume, okay? Where do you have the most volume? It just can serve as a confirmation where price is going. And then you have the amount of what is called the amount of what is called the amount of volume in Jesus Christ. My brain is far away. 3 hours. The amount of volume on each candle. And then this is your break, HVC bearish, HVC bullish. You see, you have a HVC bearish break, candle break, the HVC bearish, which means we are bearish. Okay, this can serve as confirmation for you to take your short. So this is your HVC bearish break, which means price cannot come and violate the high of the HVC bearish break or the HVC bullish break, okay? So price needs to always respect the high of the break, okay? And then the MMPB, this is the MMPB. So this is Maserati power block. The power block will serve you as a kind of telling you where is the consolidation is happening. If price break below the consolidation, is highly likely price will keep pushing lower. For example, here we see we have a bullish trend and then price start consolidating. This is a kind of consolidation, okay? Price is consolidating, and then you have a bearish break, okay? And then you see price consolidate, bearish break, consolidate, breaking down, consolidate, breaking down. Normally, when price break, price would like to come back inside of these boxes and push down again, okay? Break, pushing down. You see, price came exactly inside of this box, okay? And it pushed down. Inside of this box consolidation, since price broke down from here, it came back inside, push down, came back inside again, push down. Okay, so this is the MMPP pool. Okay, you can see the inactive MMPP line, but this is something I've been studying. I see that when you have a bullish body close, a bearish body close, price, the sign that you have that price will consolidate if you have 3 candle closing inside of that bullish body close. So this will have 1, 2, 3 candle, 4, 5, and then you wait for a break. Okay, so you can say you want to show the breakout, so you will see all the breakout. All the breakout will be bullish body close or bearish body close. You have the breakout here with bearish body close, breakout, breakout, breakout. And then if you use volume profile, you will see few MMM block, but it will show you the most important one. Okay, when you use volume, it will tell you this MMM block have the most volume. These have the most volume. So this is a neutral MMM block with a lot of volume. Okay, you see price come pushing down. MMM power block. I mean, not MMM block. MMM power block. Okay, and then and you can use them to take trade as well. And then you just use the same principle. You use the MMPD. You use the PO4, and then you frame your trade. And you say, okay, I have a breakout in this box, and I'm waiting for price to come inside of the box and give me a PO4. For example, here you say, okay, price breakout here, price came back inside. There's no PO4 here. Price came back inside here. We have a PO4 bearish. We have a PO4 bearish. Are we in premium? Yes, we are in premium. Boom, we take our trade. This is the trade I showed you earlier with the MVM. And you see, even the MVM is in completely accord with you. So everything I explained, that's a lot of things to master. You need to go back test and see what's worked for you. Okay. What indicator I use? What I use the most? I use the MMPD. I use the Pro MMM Pro, and then I have the MVM. So this is the one I use the most. And this is what I have. Normally, this is what I have on my chart. But normally, what I have activated is the MVM. MVM, like I check MVM, I say, where are we? Okay, this is my MVM. We are bullish. If you are bullish, okay, I'm looking for a bullish trade. If you are bearish, I'm looking for a bearish trade. And then I mark I do my analysis. I'm like the last external block I had. I'm like, okay, I'm complete. I'm looking for bearish trade only, discount bearish trade, I toggle it off, and then I'm because and I mark, since I mark my external block, I toggle it off, and then I'm looking for bearish trade. Whenever price come into discount, I'm looking for my trades, and then I check where's my MVM. What I always have on my chart is this trade, is this MMPD, MMM Pro, and then time to time I check the MMAI Pro. It gives me a lot of insight of if I should get out or if I should keep trading. Yeah. And then we have the PDB. The PDB is another phenomenal indicator. Okay, I love the PDB. Okay, and mostly I always have it on my chart as well. The PDB. The PDB, what I love about it is that, you see, it's telling you what it's doing. It's telling you from the last 20 candles, we have a, I will explain the AI pool, no worry. From the last 20 candles, we have, if the volume is 100%, from that 100%, we have this high volume that came in here. For example, here, we have this high volume that came here. It means that we have a super high volume that came to this level here. It's 520, which means it's like 420 times than the normal volume, which means that I expect a reaction from this level. If there's no reaction, it means that every time price comes to this level, price will react. Okay? So as you can see, price pushing down, see it react to this level, but couldn't react with power. It come into it, it crossed it, okay, which means it's bullish. The bulls weren't strong enough to push price down, and so the bear were looking where are the bulls, where we can exchange our price here, and then they push down, and then we will be looking, and then when the bear come back to retest, what you see, they push price down again. So I like to use, so see the bear keep pushing up. Now the bulls rejected price. We have high bear volume, and then we have an MC2 say no way. The bulls say let's take over. You see, pink candle, MC2, bullish body close, pink candle. We're looking to go higher. Okay, 162, 62% more than the normal volume. Okay, which means the bull enter here, and you see, and this candle came exactly to this level. You see the reaction, boom, huge reaction, another MC2, bullish body close, and then price is doing what? Pushing up. Price came back again. We keep respecting this level, and then price is pushing up. As easy as that. I don't know where's the MVM. See, MVM is below now. Okay, so now you could have never taken a trade here. Now you could have taken a trade. No, you couldn't take a trade here because you see, it crossed down here. If you were basing on the volatility, you price cross here, no trade. You wait for price to come into discount without crossing above the volatility line. It crosses, you are no longer bullish. Okay, and as you can see, the momentum line as well, it crossed above as well. Okay, it crossed above. So you're no longer looking for bearish trade, you're looking for bullish trade now. Okay, and you wait for price. So price hasn't come back to discount, so you're not taking any bullish trade, any bearish trade. So you see, that's the moment you just chill. On the 15 minutes, you're not taking any trade. With me, not taking any trade. Unless price, if I were to take a trade, it'll be a bearish trade. But since momentum is bullish and we are above the MVM line, I'm not taking any bullish trade. I'm looking for a bearish trade, but to take a bearish trade, to make sure that when I enter in high profit, no drawdown, I wait for price to come down to discount. Boom, discount. Okay, I take my trade, but I still need to see price above the momentum line. But since price is too close of the momentum line, I don't expect to take any trade anytime soon, because price didn't really extend after it crossed above, which means price highly come and cross below this line again. So I don't know. That's why you see price is consolidating to this level. So you have nothing you can do now. You don't take any trade. If you were to take a trade, it will have been on the 15 minutes. We're talking about things. If you were to take a trade, you will have a bullish trade, because you have the momentum line in bullish area in premium, and price cross above the MVM, which means bullish momentum, which means that the bulls wants to control the market. But you cannot take any trade, because to take a long, you need price to come back to discount, and both price to still stay above these two lines, and they are too close. So this price highly likely push down, and push down, which means you'll have no trade at all. So if you want to take a trade, you will have a bullish trade, but you don't really have a perfect scenario to take a bullish trade, because why? Momentum line above 50 line, we bullish, and MVM price is above MVM. We can and it's very close of the MVM. It didn't extend, which means that the bulls are not that strong. And if price were to come back to discount, price will need to cross below the MVM again, which means you can't really take a long trade. Okay, unless if you are basing your trade on the momentum line, yes, maybe when price come into discount, it gives you a nice setup. Okay, you enter. But now you have nothing clear. The only thing you can take, you can take a blind trade, a bearish trade rather than a bullish. Okay, this is how you switch your mindset based on what you're seeing price is doing. Because remember, you don't need to be right, you don't need to be wrong. What's important for you, let let them decide what they want to do. So the MMM will tell you exactly what to do. You just need to be patient. Okay, as I was saying, we cross above, but it's not giving you in. We didn't really see a nice extension above the volatility lines, which means like it's just a kind of trap. You know what I mean? So so you just wait, and then we have a weak bearish candle, and if this candle were to close, we highly likely have a PO for C2 here, which means that price highly likely to push down. Which is it connected with here? Yes. Remember what I say on the 1 hour. Now we have, so in the 1 hour, what price do we have? We have a bearish scenario. Momentum line is bearish. And then what do you have? Potential bearish reversal on the 1 hour. That's why you need to frame your trade based on what? Higher time frame. For example, if I were to trade, I would be entering this candle here. I would have put my stop loss here, because what? A potential bearish reversal, and this market came inside of what? This is your internal block. So this market came into what? An external block in 1 hour. External block in 1 hour. External block in 1 hour, CDS. And then what? And then MMX and MM internal block. Boom. You need to frame your trade on what? On higher time frame before you go to the lower time frame. Lower time frame is just 4 entry. Since I'm explaining, I'm just explaining you how price behave. Okay. And then this is your internal block on short. And then price came inside here. You have your MC2 rejection. MC2 are mostly rejection candle, telling you that price is no longer in your advantage. And then you have what? Bearish body close candle, PO for bearish. You have your internal block, and this is where you enter your trade. You target 1 to 2. Because what? Your momentum line is what? Bearish. This was a bearish pullback. And then you have your confirmation to enter this trade here. You enter in the middle of this candle, stop loss here. If you were to trade with the 1 hour, just 1 hour, and then this is your 1 to 2. 1 to 2. Oh, you already had 1 to 2 long time ago. So 1 to 2, and you're done for the day. That's all you need. But if you were focused on like I was saying, on the 15 minutes, you don't really have anything in your hand. I was saying we didn't really have an extension here. The extension wasn't really proper. Okay. And if you were based on the 1 hour, you say, okay, I'm waiting for price to come inside of the external block, and then you have your rejection here on the 15 minutes, rejection here, PO for bearish, okay? And then what do you have here? Great candle, and you could have taken your trade, but this trade will not be based on 15 minutes. It will be based on 1 hour. You're using the 15 minutes to enter, okay? And so you'll be taking your trade here. From here, you take your trade, stop loss here, and then you target 122. This is 125. Target 122, you have a 122 here in this candle. Up, 122, and done. 122 and done. And then when price came back to this level here, maybe in 5 minutes, you might even see the same trade again. 5 minutes, you see? Rejection. 5 minutes, you have a rejection here. Rejection. PO for bearish, you will be entered here. Stop loss here. And then you target 122 on 5 minutes. 122 here. And this one candle, boom, 122. Okay? When price came back here, you have another rejection, okay? But you didn't really have, you have the rejection candle. Now you don't have a PO for bearish to really confirm. And then, so that's why price didn't really give you a PO for bearish, and price give you a MC2. Okay, you wait. And then price now give you a rejection, a PO for bearish here. And then you wait for price to come back here. Boom, on the 5 minutes again. 1 minute, you'll pretty much see the same thing. See, this is the 1 minute. What do you have? You wait for price to come here, price get inside of the here, and price give you what? Price give you a rejection here, but you wouldn't enter this trade here because what? Because this trade is outside of the 15 line. So this is your best trade here. Here, touching the 80 line, you will be taking this trade here. If you were to look on the 1 minute. Okay, and this will just be your market city change here. This will be your internal in 1 minute. You'll be taking the trade here. It will be what? 122 again. This is 125, 122. Based on 1 minute. It's the same thing over and over again because the market is fucked up. And you take 122 here. Boom. And what's again? This is based on the 1 minute, and then when the market came back here, it touched, you have the rejection candle here, and then you have your PO4 here. You say, okay, rejection candle and PO4 bearish confirming, PO4 bearish, red candle, and then this is the moment you enter because you have the rejection, but you have no bearish body close that confirm the rejection. Okay, but you can still enter here. It's up to you, but I prefer to have my PO4 bearish when I see the rejection. And then you enter middle of the candle here. 122. Remember, these trades are being framing the trade in 1 hour and dropping in the lower time frame to take a trade, and you have your 122 here. As simple as that. Now let's get out the MVM because we are losing. So this is 122. Boom, 122, and you're done. As simple as that. Inside of the chaos, but you frame your trade based on the 1 hour. And then when price came back here again, rejection candle here. Rejection candle, PO for bearish. What do you see? Did we touch the 18 line? Yes. Are we still in this in premium? Yes. Do you have the confirmation of the FDMC2? Yes. This is the PO for C2? Yes. And then where do you take your trade? You can take your trade here, exactly here. After this PO for C2 confirming, and then you put your stop loss here. What do you do again? You target what? 122. 122. And then you're done. As simple as that. As I say, go and back test again and again and again and again and again. Again and again. For example, on the 15 minutes, what do you see here? 15 minutes. In the 15 minutes, this is your PO4 C2. Okay. If you say, okay, I'm going to enter a trade, you'll be looking on the one minute. But when you see the 1 minute, we are into discount. You don't enter. You just wait. But what you want to do, you want to always enter a short in premium, not in discount. You just ignore the market. The market is in your favor, yes, but if you want to enter based on the 15 minutes, you can say, okay, I'm entering here, but your stop loss will be all the way up here. You want to take that risk, it's up to you. You know what I mean? It's up to you. or you'll be entering based on the 1 hour as well. Do you want to take the risk? It's up to you, which means your stop loss will be all the way up here. Okay, if you were to enter here, your stop loss will be all the way up here, because if you were to enter late in the 1 hour, your stop loss will be anywhere here. Okay, but it's not the best thing to do. You need to enter at the beginning. You still can enter here because we're still in premium, but to enter, it's better you wait for this candle to close. When it closes, you have a better chance of retracement. You will be entering much better in the trade. Yeah. And then this is the and then AI Pro. The AI Pro is, what is it? So I came to conclusion that we need a lot of matrix to really understand what price is doing. Yeah. So Pradeep asked me to. Okay. For example, the previous candle MMC bias. It's a Maserati candle bias. It's a bearish body close. For example, this candle, what do you see? It's a bearish body close, right? Let me just open this. Your PC1 delta MAR was what? You have a negative delta with a with a positive volume on it. But the previous candle strength was negative 29.7%. But I prefer the candle when the candle strength is 50% up, and if it's 60%, it's much better. But since we are like 1 hour, it's just like crazy. But if you go in the 15 minutes, you might see, for example, you see it's 92.1%, and then the delta was positive and it's changed negative, which means like we are in a very powerful bearish trend. Okay, but let's go back to the 1 hour, and then let's go back. You can go to the 5 minutes or so. 5 minutes is we see the things clearer. Okay, you have a bullish affinity minus with negative delta, which means we highly likely pushing down. Candle strength is 17%, which means candle strength is very weak. Current trend, this is the overall trend. The overall trend is a bearish reversal. The current trend is based on the MMPD. Okay, on MMPD, on the PO4 candle and everything. Okay, we are facing a bearish reversal. Now, the bearish reversal, and then the MMPD bias did what? It confirmed the bearish reversal. Why? Because this line, you see, the MMPD, the momentum line, and then Supermax trend, they cross below 50. So bearish reversal, it confirmed the bearish reversal. Okay, bearish reversal confirmed, and then it takes it check on the last 3 bars. For example, 1, 2, 3 bars. It tells you this it's 0.76% strong. The last 10 bars is bearish. The last 21 bars are bearish, which means price is overall bearish on the last bars. Okay, trend quality. It's a confirmed. A confirmed trend quality means 2 stars. It means that we are a bearish, but trend quality is just 2 stars. It's not 3 stars. So trend quality is not the best. It's okay. When you see confirm, yes, we are in a bearish trend, but it's not that strong. Okay, it's just 2 stars. That's why you see this market is like kind of like slow, and beside of that, we are into discount. High volume strength, high volume strength. Okay, high volume strength. 2.9x. Remember, this volume strength it's based on this candle, and this volume strength is based on the MMPD candles. They are different. Okay, the calculation is based on this candle. They are kind of different. That's why you say this is low, this is high. Okay, MMPD value, we are in high discount. High discount, which means 18%, which means like we under 20. This is 20. We are on 18. No, all these calculations are based on the last candle. Remember, all these calculations are based on the last candle, not on this candle. Until the candle close, you will not have any data here relating this candle. These are based on the last candle. Okay, so we are talking about this candle. Okay, so that's why you say bullish affinity minus. Okay, so what's next? We are in high discount, which means this candle was on 18 level 18 below 20, which means in high discount. So when this candle close, you might see we are in extreme discount. 1 minute 20 seconds to close. When it close, if it stay down here, you might be in extreme discount. I'm missing my trade for today, but anyway, I need to explain that to you. Trend strength, okay? Trend strength. So this is a volume strength and trend strength, okay? Trend strength, it's very strong, which means we like the strength of the trend is very strong, but the volume is high. Trend quality is 2 stars based on this candle. Once this candle close, trend quality might improve. Yeah. Action zone, what do you need to do? Massive. Where are we? We are in a massive sell zone, 3 stars. And we have a 1012.45% sell power, which means we have the sellers here. They are crazy pushing this price down. They don't care. And then 3 time frame out of 3 time frame are bearish, which means like the last 8 candles, the last 21 candles, the last 55 candles are a line for a bearish market. Okay, that's why you see, even you see now price is trend quality is strong because of this candle close. It's super strong. Short 1.1%, 1.25, 1.24. Strong bearish trend, strong 110 strength. Delta MA are negative, pushing down. Bearish body close plus, which means you see all these are line. You see this candle immediately start pushing down. Okay, we are in extreme discount, so we need to be careful. You see these little things here say be careful. We are extreme discount. However, and we have a massive sell zone. Okay, 3 time frames to 3 time frame over 3 time frames, 8 bar, 21 bar, 51 bar. This is like, so for example, this is like a very quick insight of the last bars, but this is for a long term. This is like telling you long term perspective, long term trend. 8, 21, 55 bars, they are all bearish, which means you don't take any long here. And then what do you see? We have strong bearish in cold, which means yes, we are in cold, which means you can still take a trade here, but reduce your position. We are in strong bearish cold. Reduce your position size 50 to 75%. Don't risk all your money here, okay? Because this price might reverse at any time because we are in extreme discount, okay? So be careful. You see, strong sell, but still low volume on the MMPD. I think I will remove this volume strength on the MMPD. I don't want you to be confused. Or maybe I can just put the candle volume to know the exact strength. Yeah, to not have a lot of things here. Yeah. Yeah. Basically, so this indicator, the MMAI Pro, is just like chaos to clarity intelligence. It's like the market is a kind of chaos. It is giving you clarity of what you're experiencing, what you're seeing. Okay, and then you will have the sequential stars. The sequential stars are, you don't need to trade on them. They are just confirmation. For example, it's telling you price is bearish. Price switch from bearish to bullish. It means we have high volume. You see, and here you have MMPD green, PO4 green, and price is pushing. And now you have a huge volume bearish, but cannot hold. Bull take over. Okay, bearish bull, which means like you are in a consolidation. When you see these things happening, you just avoid trading if you weren't already looking for a trade. Okay, so basically, even you see the sequential stars, they just serve as a confirmation. You don't use them to take trade. They can just help you. Exactly. Exactly. Thank you, brother. Yeah. Because I take time to develop this. It's years of non-sleeping, thinking, writing down my thoughts, looking at the market, looking at the candles. What are they doing? When to get out? when to get in, because I hate, guys, I hate being in drawdown. I hate, you know what I hate? I hate being, I hate entering a trade to be in drawdown. I hate it. I think that's why I developed this system, because I hate being in drawdown. I hate it. And I guys, I backtest this over and over again. I bought account to just backtest, live test, backtest, live test. I don't care. Live test, backtest, live test, backtest. I live test. I let the market. I let the market take my stop loss, take my profits. I don't care, because I was live testing. I was putting myself in live environment. I was like, I put a budget. I say this budget just to back testing, not back testing, to live testing, because I do back test, but I prefer live testing, because if you're willing to do something for your profession, you know what I mean. When me, I take everything very serious. If I leave the medical field, so if I'm doing trading, I was like, I need to do this in a high level. And I was like, I don't really like the fact that I see all these things, all these videos. I don't know where to get out. I enter a trade and the trade came back to me. They tell me to enter on the on fair value gap, the thing inside of the fair value gap, and you get in, and then the market, your target is like 10 points, and then when you check, the market came back, you take your stop loss, you're like, what the hell is going on? It's so, and it was so annoying. And I'm like, oh my gosh, all this information are the same information being repeated over and over again. It doesn't really tell you when to get in, when to get out, when to scale in, when to scale out. And I spent hours and hours in front of the chart to develop this system. Hours and hours. It's not something run. I mean, you can see that. You can see the precision. So I don't really need to prepare any class to come here. I will come here, explain you exactly the same thing over and over. The market does this, I do that. The market does this. You see, since we were in a cold, momentum strength was in cold, you could take a trade. Even you're in extreme discount. That's the moment you can take trade in extreme discount. Because momentum is strong, even when extreme discount, it will tell you are in a cold, strong bearish, but it's cold. It's okay to take a trade. Just reduce your position, but it's okay. Do you see what the market is doing? Do you think this kind of calculation, guys, it's not something you just bring on? It's something that requires years of knowledge, testing, live testing. Put yourself into the fire, testing, live testing, losing account, checking them, pushing the boundaries. It's not something random. It's something, but I'm not telling you to go and trade it blindly. Just go. I explain you everything. I took 4 hours of my time, stop trading, to really explain that to you. So use it, but back test, live test. So every single decision you take, remember, I'm not telling you to use it. If you use it, it's your own responsibility. It's your own responsibility. And it's your own decision if you decide to use any of my indicator, if you decide to use the MMM, it's your responsibility. This is what I tell everyone. You make money, amen. It's your money, it's your responsibility. I have nothing to do with it, because I explain how I understand the market, my point of view, and you say, okay, I take my responsibility as an adult to back this. You see, the guy who came here, what is it? What we were saying thing. This guy used my system. He made $25,000, and then what he did, he gave the market the entire money again, and he started using something completely random. Start making his own rules. Start doing crazy things. The guy made $25,000 from prop firm using my system, and then he came back to me. Oh, Dr. Max, so thank you so much. Thank you this, thank you that. And then after that, what he did, he think he knows everything, and he start doing random things. He start not following the rules, because when you make a lot of money, you're like crazy, because you think you know better than even me. And he start using different things. And he starts throwing money to the market, and he lose the entire $25,000 in buying accounts. No, he's like, oh, the MMM doesn't work, blah 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 blah. He's trying to talk a lot of random shit. I just block him. I say, don't talk to me. You know, just take your own responsibility. You cannot make $25,000 and then you just give it back to the market, buying accounts without discipline. And he say, oh, I told him that to buy me. Are you crazy? So it's like, oh, the MM doesn't work, blah 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 blah. So I just block him. I say, man, it's your own responsibility. If you make $25,000, you glorify the MMM. You glorify me the way I explain you the simplicity of the market. But now, if you give it back to the market, buying account, losing account, buying account, losing account, it's your problem. It's your lack of discipline. So you need to discipline yourself. You need to discipline yourself. You cannot give $25,000 to the market buying 10, 20 accounts. I always say, if you make money, buy one account. Make one account, buy every single account. But if you buy one account, you make $25,000 following the MMM principles, following things. And then now you see that money in your hand and you think that you start doing crazy things, buying 10 or 20 accounts, thinking that you'll be rich, you'll be millionaire one day. And then now you don't want to take that responsibility. You're telling me, oh, because the MMM doesn't work. The problem is you, because it's you, because you need to know $25,000 from prop firm. It's not everyone who can make it. You cannot be glorifying me after using the MMM with principle, taking one trade, getting out, using every single thing I teach. And then when you make that money, you came to me, you take me, oh my gosh, as a God. And now you don't have discipline. You don't know how to manage your money. And then you give it to the market. And now you're trying to boycott me, telling me that the MMA doesn't work. This is something I've spent years developing. This is something I spent my entire time, day in, day out, developing. You know what I mean? So, and then you suddenly say, blah, 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 blah. No, that's your problem. I have spreadsheet. I tell him, you know what? If you can come with a spreadsheet that showing me every single trade. This is not something I was supposed to be doing. Showing me where you take all your trades, that you follow the MMM principles, you follow every single things I teach. Even you make $25,000, you lose it back to the market. Even you should take responsibility for your mistakes. You cannot be looking for someone, for a God to give you that responsibility. It's yours. You cannot give back $25,000 to prop firms. It's yours to take. You know? And then now you're trying to look into yourself. Tell myself, okay, what I did wrong? You know what I mean? It's so sad. I'm like, this guy, I don't even want to talk with him. This kind of guys, how can you be doing that? This is a lack of discipline. This is against everything I've been teaching. You know what I mean? It's so sad, but you have this kind of individuals. You know what I mean? You know, that's why I'm like, these guys are crazy. I'm like, this is something you just need to follow what the indicator telling you, what the system is telling you. Not because you make money, it means that you're super good. No, because how did you make that money? Because you were following my principle, my discipline. But once you start getting out of it, because you make money, woo, no. Keep on the same path. You know, you buy one account, you lose it. Okay. Oh, I need to stop. Okay, let me start a business. Let me invest at least 10,000, 15,000, 20,000 from that money. You cannot give 25,000 back to the market. This is crazy. And then you're trying to find a scapegoat to say, oh, because your system doesn't work. What? I spent years developing this. It is not something I take this very serious. From the moment I decided to leave the medical field, my entire family was like, are you crazy? Why will you stop being a doctor? I've been being a doctor for the last 15 years in the medical field. I did a master in public health in one of the most prestigious universities in the world, which is the University of Tokyo. And I leave everything behind. Everyone was against me. But when they start the money coming in, no, everyone is like, yeah, let's go, keep pushing. You know what I mean? So I don't want any person who doesn't have discipline, who doesn't have capacity to manage the money, manage the emotion, manage the trade, and not taking responsibility for the action and putting it to someone else. Okay? So, like I say, if you want to use my indicators, it's your own responsibility. Your own responsibility. If you want to use it, your own responsibility. It's your responsibility as an adult to go back test, live test what I say, because trading involves losses. It's not my business if you lose. That's your problem. If you didn't go, I give you all the knowledge or the information you know. I'm not retaining anything for myself. If you don't go to learn the basic, the foundation of trading, you cannot really understand what I'm saying. If you're not willing to sacrifice yourself, to be successful in life, you need to sacrifice. It's not like you see Elon Musk with billions of dollars. It wasn't today from tomorrow. It's a lot of failure. Me, I'm telling you, I've burned a lot of profit accounts. To see me like doing this is a lot of failure, a lot of tests, a lot of courage to keep on going, because it's not easy. Sometimes I lose. Sometimes I'm like almost getting paid and I lose the accounts. I could have just like, okay, I remember one time I was in an account. I make $8,000 in a 50K account in 5 days. And then the last day for me to get paid to what I did, I'm like, okay, let me target. I was targeting, maybe let's try to make it 15,000. What happened next? I lose the account in the same day, and I only needed $200 to get paid $4,000. Can I say I cannot give the fault to anyone else. It's my fault. It's my responsibility. I need to take it because I decided to be greedy. I decided I want more. I wanted more, and then I paid for it because I spent entire days in front of the chart and getting into it out and out. But now, but all of these failures bring me here. All of this failure brought me here. Give me this insight to develop these indicators. Give me the insight to understand the market, because you cannot be successful without failure. You learn from your failure. You stand up. You discipline yourself, and then you move forward. You keep pushing. And trading, I'm telling you, trading is more difficult than medicine itself. I prefer to be in an emergency room, working 24 hours, weekend and entire weekend. I will have less stress than the stress trading used to give me. But now I don't have that stress anymore, because I develop a system that is telling me, get out, get out, get out, don't get in, get out, don't get in. Because I can just look at the market. I look the indicator, I'm like, okay, I'm going to take a trade, I'm going to take a short. Like I was telling you earlier, I was like, okay, you see, I was seeing the MVM, price cost above the MVM here. I'm like, okay, here, price cost above the MVM. I see, like, if I were to take a long, price didn't really extend to give me a long. For 15 minutes told me that. I'm like, if I were to take a trade, I will take a bearish trade, not a bullish one. Even price was, even the MMM, even the MMM momentum line was above. Even this was above. I'm like, okay, we didn't extend, And if we were to go into discount, there's not enough space to breathe for this price to go into discount without violating the bearish momentum line. This is exactly what happened. So I can see this kind of thing before they happen. And why was that? Why I could see that even when in the 15 minutes? Because the 1 hour was telling me that the momentum is bearish. And this was it's just a bullish retracement. And what happened next? Price just pushed down. And when you look at the 1 hour, MM external block, MM internal block, a MC2 rejection, PO4 bearish, boom. What else do we need? I could see that in the 15 minutes. Even I wasn't in the higher time frame. I was like, if I were to take a trade, it will be a bearish trade because there's not enough space for this market to come back into discount without violating the volatility line. You know? But to get this kind of things, you need to fail. You need to fail. You need to go over it. You need to spend nights and nights and nights out. What I'm teaching you here now, it's like 7 years or 8 years of your life struggling to understand what I'm teaching of being a trader. Me, I couldn't really find something like that. You know, the only thing you need to do is study and be disciplined and go for a run to remove the stress. Thank you, Pradeep. Thank you. Your indicators are so sharp, even fortune tellers might get jealous. Thank you, Pradeep. You lost 30K trade because you are with us explaining. So you missed the trade. Okay, it's my pleasure to be explaining you guys. Yeah, anyway, I think that's all for today. Thank you for being with me, and I hope you go and learn and master the knowledge. And I mean, this video is 4 hours, but it's gold. Go master it, back test it, and then apply it back. Apply your knowledge. And if you have any insight, any improvement, you see anything you might think, if you see any error on the indicators, anything that based on the knowledge you see this should be like that, this shouldn't be like that, just come to me and tell me, and then so I can fix it. So I'll be looking at the MMM Pro to fix it. Okay. So thank you very much. Please have a good day and see you soon. We'll keep in touch. Bye bye. Take care. It was a pleasure.